package is expected to be delivered this holiday season, with FedEx, Amazon, and UPS battling it out.
But we begin with the markets, retreating a bit after a higher open, with the Nasdaq hitting a new record high. President Trump speaking on a video conference call with troops in the last half hour. Here's what he said about the China trade deal.
We'll be probably doing that at the right time. We'll be doing a smaller ceremony. Ultimately, we will be having, on the China deal, we will be having the signing ceremony, yes.
Will you sign it, you and Xi Jinping?
We will ultimately, yes, we will.
Do you know where that
when we get together, we will do, but we'll have a quicker signing because we want to get it done. The deal is done. It's just being translated right now. Okay? Thank you.
For more on trade in the markets, let's bring in Kevin Caron, Senior Portfolio Manager at Washington Crossing Advisors, and Kenny Polcari, Senior Market Strategist at Slate Stone Wealth. Guys, thanks for joining us. Kevin, reflecting on what the president just said and your outlook for the sort of corporate performance next year, what's your expectation in terms of trade deals and how trade could weigh on the markets?
Well, the market and the economy really needs this because we've had a very good year this year in the stock market, but a lot of it's been driven by liquidity and central bank action, not so much in terms of earnings growth. And in order to get a good year to follow 2019, we really need to see the data that was starting to turn up, some better numbers on manufacturing, better numbers on business expectations. We need to see that follow through. And trade is a really important factor that's driving business confidence, ultimately investment in earnings. So hopefully we do get something. We see no reason why we can't. And that could create a very good start, at least, to 2020.
Kenny, do you agree? I understand you think we'll see the market pull back a bit in the first quarter of 2020.
I do. Listen, overall, broadly, I agree with Kevin. I think he's right. Trade is very important, is going to be important into 2020. But I wouldn't be surprised if in the first month, January, February, you actually do see the market pull back. Look, we've had some major moves in the market. The S&P and, NASDAQ up 35, 38%, whatever it is. The S&P just at 30%. And so there may be a lot of planning as we hit in January. People that maybe want to take some money off the table, but didn't want to take it off in December, know the taxes 4 months later in April. But if they take it off the table in January, they don't know those taxes until April of 2021. And so therefore, there may be some of that. I wouldn't get all up in arms about it or worried about it. I think that would just be normal kind of financial planning and tax planning. But so I do see that would be the weakness going into January, not a slower economy or not a trade issue or not, talk of recession at all. I think it's much more going to be a technical kind of rebalancing. That's all. And then I think the market actually, I'm really bullish on where the market is on the U.S. economy. And now that we've got, trade 1.0 basically done, as they tell us, we're really on to trade 2.0. And that's going to be the next driver on top of everything else that's going on in terms of the presidential election.
Yeah. Hey, Kevin, are you more interested in seeing how a phase one text sort of ratifies the market's view of this détente, or are you looking for Q4 conference calls to ratify what we've seen in terms of multiple expansion?
Well, both really. It's ultimately going to be investment spending that we need to see pick up, because that feeds very nicely into earnings growth, which has been the thing that's been absent from the party this year. In fact, there's a real dichotomy here because growth for the year slowed. We know the IMF coming into the year was looking for 3.7% global growth. It's really looking more like 3% growth. The United States is the only G7 country growing something above 2%. The rest seem to be growing below 2%. So we're at a real inflection point where the market has given us a big gift this year with these significant moves in terms of the upside. But we need to see follow through in terms of growth and growth in earnings expectations. If we don't get that, we could hit some headwinds next year. But thankfully, the data seems to be turning, seems to be getting better. And whether you're talking about U.S.-China trade or Brexit, which is better defined now, there seems to be a little more confidence as we head into the year. So and at least it's not the worst outcome, which would have been a breakdown in trade conversations or something more significant breaking down in terms of global growth. So we're happy to see the progress that we've been making the last few weeks.
So Kevin, what gives you the most concern, if anything, heading into next year?
I think it just has to be the duration of the cycle. We've had a very long cycle here. A lot of it has been underwritten by very, very low interest rates. Look around the world. You've never had a phenomenon like we have today, where we have between 10 and 20 trillion dollars of negative yielding debt out there. That's very strange. Never before in human history have we had that. And when you have very long periods of very low interest rates, oftentimes you can end up with expectations that get priced into assets that are hard to be met. So if you get to a point where the credit cycle globally rolls over, then yes, we would go through a more difficult period, maybe a recession. But there's nothing in the immediate data that seems to be pointing to that. But that is obviously something that we're aware of and we need to be watchful of as we move through the next several quarters.
Now, Kenny, you mentioned expectation of some near-term profit taking, but what are the macro issues that you're watching that could pose the biggest risks? And on the flip side, where are the areas that you think provide the biggest opportunity, either in terms of sectors or international markets?
So I think it's going to be about trade and the presidential election, certainly for us in the U.S., right? About trade 2.0 now that we're going to get past 1.0. And then I think up until Super Tuesday, there's going to continue to be this question about who's really going to rise to the top, and then what's the platform going to look like, and is the Democratic Party going to go more far left, or is it going to come to the center? Because that then is going to define kind of how asset managers set themselves up in terms of, you know, what sector is going to be most affected. Look, if they go far left, as we were fearing maybe with Liz Warren or Bernie Sanders, then you had to worry about healthcare, you had to worry about pharmaceuticals, you had to worry about big tech, you had to worry about the financials, right? But if we see them coming more to the center, I think a lot of that pressure gets taken off. And you can see it in the way healthcare alone has performed. Ever since she started to go down in the polls a little bit, healthcare has taken off again because I think people are starting to reevaluate. So look, next year, I like energy. Say what you want. It's devalued. I like those big names. I think there's a lot of opportunity. You can start to see it raising its head. Oil is up 12 or 15% so far, and I think some of the big oil names, Schlumberger, Exxon, Chevron, are going to start to really play catch up. I'm big on that space. I like it. I think it's exciting. But then I also think once we get past Super Tuesday, and again, you see more of what the platform is going to look like. I think you got to be in financials. You got to love tech because 5G is coming to change the world again in 2020. So there's going to be a whole nother revolution in tech. And so anything that's 5G related in that space is going to be certainly hot. And the cybersecurity space, things like the hack ETF or Palo Alto or Cisco, anything to do with really cybersecurity, because once again, I think we're still on the cusp of what could potentially happen in terms of security risks. And so I think there's a big opportunity in those cybersecurity type names.
Kevin, Kenny, thank you both so much for joining us this morning.
Thanks. Merry Christmas.
Thank you. Merry Christmas.
Same to you guys. $41 billion in 5-year notes up for auction a few moments ago. Santelli's in Chicago. Rick, good morning again.
Good morning. And before I even talk about the auction, let's look at the landscape real quickly. Yields are up against resistance to the upside. What makes yields go up? Price going down. So treasuries have had selling pressure. Another issue. It's real thin markets today, right? Yes. Well, the latter has nothing to do with the auction. As Carl said, $41 billion is going to move no matter how many people are here. I gave this auction an A-. $41 billion, 5-year notes on a half session. And boy, they just gobbled it up, mainly for the reason I gave first, because they look at where the market is, thin markets, they think this is going to be a great buy, and the price is going to reverse when we start to put more people into the equation. Real quickly, so the yield was 1.756. The when issued market was dead set, didn't trade at all, right around 177.5. Lower yield, higher price. 22.49 bid to cover. That's the second best bid to cover going back to July of 2018. 62.4 is the indirects. That's the second best since August of 2018. And finally, direct 16.1. Well, it's the best since June of this year. No matter how you slice it, the 5 years flew off the shelves. Carl, back to you.
All right, Rick, thanks. Still to come this morning, Travis Kalanick calling it quits, the co-founder leaving the board of directors at Uber, what it means for the stock, which is down more than 30% for the year. Later on, do not miss Wall Street legend Byron Wien on the record rally and what 2020 is going to bring us all. A big show still ahead. Don't go away.
There's a lot of talk about value out there, but at Fidelity...
Ho, 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 who's made a list this year?
I want a new phone, one with amazing cameras, ultra-wide lens, of course, live focus video. Well, it has to be 5G ready to stream all my films. Can it come with something awesome to listen to them through?
Darling, I think he was talking to the kids.
Get everything you want and more. Purchase a Samsung 5G ready device and claim a pair of silver wireless Galaxy Buds at no extra cost. Shop our 5G handsets in store or online at your local O2 store or o2.co.uk. 18 plus. Offer excludes Galaxy Fold 5G. Purchased by the 25th of the 12/19. Claim from Samsung within 30 days. T's and C's apply.
Be honest. How much attention are you really paying to this advert? 25%? Maybe 30% if you're sitting in traffic and the kids have stopped arguing? What about 0%? Well, now's the time to give 0% attention, because for a limited time only, the entire Mini range is available with 0% APR. All you need to decide is which Mini is perfect for you. Good to know we've now got 100% of your attention. Search 0% Mini to find out more. Who's in? Minimum 25% deposit on 24-month select agreements for new models registered by 31st of December 2019 at participating retailers, subject to availability. Excludes Mini Electric. UK residents aged 18 plus. Guarantees may be required. Mileage and other conditions apply if you return the vehicle. T's and C's apply. Mini UK, a trading name of BMW UK Limited, is a credit broker, not a lender.
Want TuneIn to remind you when the big NFL game is about to get underway? Be sure notifications are allowed on your phone and search NFL on the TuneIn app. Find the game you want to hear under events and tap Notify Me. We'll let you know exactly when it's time to listen in for kickoff.
As we play out the 2010s, TuneIn's looking back at the music trends that defined the decade.
Don't believe me, just watch.
The 2010s saw the rise of the viral hit when meme-ready tracks like Gangnam Style,
Oppan Gangnam Style,
The Harlem Shake,
Do the Harlem Shake,
What Does the Fox Say?
What does the fox say?
And of course, Old Town Road snowballed from internet oddities to global phenomenons.
I got the horses in the bag. Horse stock is attached.
Keep listening to TuneIn for more trends of the 2010s.
When you're not listening to your team, take it to the end zone, the rim, or the net. Keep up with the biggest moments in sports by following TuneIn on social media.
Block, hook, into the end zone for the touchdown.
From reminders of the live top games to tips of the best sports stations and podcasts.
Welcome to Undisputed. We are live from Los Angeles. I'm Jenny Taft here with Skip Bayless.
Follow at TuneIn on Facebook, Twitter, and Instagram to get the most out of TuneIn.
Uber's co-founder Travis Kalanick leaving the board of directors effective at the end of the year. Our Josh Lipton helped us break that story this morning and joins us with the latest. Hey, Josh.
So that's right, Carl. Travis Kalanick will now focus on his new business and philanthropic endeavors, saying in his statement, Uber has been part of my life for the past 10 years. At the close of the decade, and with the company now public, it seems like the right moment for me to focus on my current business and philanthropic pursuits. Kalanick was ousted from Uber, of course, about 2 years ago in 2017 amid a series of scandals, but he remained on Uber's board. And this news coming as Kalanick had been systematically selling out of his position in that company, having sold about 90% of his stake and more than $2.5 billion worth of shares. And those sales have been a headwind for Uber in its first year as a public company. That stock now about 30% below its IPO price of $45. So what is next for Kalanick? Well, he's already busy with other pursuits. For example, launching his latest venture called Cloud Kitchens, which rents out space to restaurants. In a statement, Uber CEO Dara Khosrowshahi saying that he was enormously grateful, in his words, for Kalanick's vision and tenacity while building this company. Carl, back to you.
All right, Josh, thanks for that setup this morning. Joining us with his take this year on the massive executive shakeup, and former Medtronic chairman and CNBC contributor Bill George. Bill, good morning. Good to have you back.
Morning, Carl.
How common is it for a co-founder to completely leave a company and not leave even 1 foot in the door, whether it's on the board or with a stake?
Well, I think it's about time in this case. I think he should have left 2 years ago. Look, Travis is a brilliant entrepreneur. He had a great app, but somebody's got to run the company. I think at different times and stage, you need a different leader, like a Tim Cook coming in. And so I think this is very timely. And they'd had a lot of cultural problems in addition to using investor capital to fund the losses on underpricing taxis. So I think now they got to get back to a normalized business model and get out of this high rate of losses, which is still running on an EBITDA base of about $2.5 billion a year. So
you think
Travis can move on?
You think his presence on the board or his presence as a stakeholder was a distraction for management?
No doubt about it. I think Dara has to have free reign to run the company. He's got to change everything, the culture, the leadership team, maybe the business model. and to get it more to eventually a profit model. I mean, they did that at Amazon. I think they got to do it here. I'm not saying it can't be done. It's a great app. I use it all the time. But still, it's time to move on.
Bill, it's interesting looking at sort of the timing of this. He's getting out of his stake on Uber just as we have Boeing's CEO pushed out. And this year we've really seen a record number of CEOs leave their posts, some fired for misconduct. Others are founder CEOs who are leaving amidst this idea that maybe they're not the right people to be running the company anymore. How much do you think this is about sort of a cultural shift, maybe boards holding their CEOs to higher standards?
I think there's no doubt about it, Julia. Boards are under a lot of pressure these days, particularly from outside groups, regulators, government, media, politicians. So I think they have to, the CEO's got to perform. And if you have any kind of deviation from corporate standards, as we saw at McDonald's with Steve Easterbrook, the board has to move. If it's created a culture, like you had Mark Parker at Nike, I think the move, it's got to happen. Or if the profits simply aren't there, you can't solve the problem. And I think it's inevitable that Boeing was going to make a change. And Boeing's very lucky to have Dave Calhoun to step in and to lead the company. And he's a very experienced aerospace guy and aviation guy. So I think he can do that at Boeing. But I think you're going to see more changes coming up. The time frame for CEOs to perform is very short, particularly earlier in their tenure.
Yeah, well, you went to Boeing where sort of we were headed. So, I'm curious, do you think the board also needs to be shaken up at all when it comes to Boeing beyond just the executive suite, Bill?
I think they have an outstanding board, David. I'm not worried about the board. I think they needed to give Dennis a shot. And the problem with Boeing is they didn't move quickly when they had the crisis. They waited too long. They should have done it in October when they had the first crash, then in March. And they waited about 8 weeks before they really came public, and there was a lot of blaming other people, blaming pilots and things like that. They should have moved faster. And I think Dave Calhoun will restore the confidence externally, and that's what's got to be done right now to give them time to get the MAX back into the air.
And is it enough to just to replace the CEO? You think that sort of is what they needed to do and they can move on from here?
Well, they already replaced the head of commercial aviation. I think Dennis did that, and I thought that should be done. You remember back when Alan Mulally was running commercial aviation, he did an amazing job. They need that strong person. Changing the board's not going to really change anything. This board is not complacent. They have a lot of very strong directors that have been through crisis like this before. And they gave Dennis a shot, but the external pressures made it inevitable. But they're fortunate to have Calhoun there. Look at Wells Fargo, David. They took 6 months to go find a CEO, and they'll take him another 3-4 months to get up to speed. So they lost almost a year. Whereas Boeing, Calhoun can move right in. He was making phone calls the other day to everyone in Washington, trying to restore that confidence and give the company time to get it up in the air and not, frankly, be overconfident.
Now, in retrospect, was a change in leadership inevitable? Should Boeing have made this change earlier, or do you think that Muhlenberg really deserved a shot at handling it better than he ultimately did?
Well, I think the CEO deserves a shot. I'm not quick on the trigger. I think you have to give him a shot. CEOs get under a lot of pressure from time to time to see if they can. But all I'm saying is today's world is different. It's the external pressures are so great. And they mount up on you, and that's when you have to move. And we've seen this in case of other crises. And that's when I think the board has to step up and make the change.
Finally, Bill, I'm looking at the list of exits this year of notable CEOs. Muhlenberg and Oscar Munoz are pretty recent. Art Peck at Gap. You mentioned Easterbrook, Tim Sloan, Kevin Plank, Kevin Burns at Jewel, Mark Parker, Adam Newman. What's going on at boards? Why is the leash shorter this year, and it's going to stay that way?
Well, I think there's no one cause that's causing this, but I do think boards have to recognize when they have a problem. By the way, when it's a code of conduct problem, it's almost instantaneous, as it was at Intel, as it was at McDonald's. When it's a cultural problem, it takes longer for the board to figure it out, like it did at Nike. They're fortunate now to have John Donahoe go up there and replace Mark Parker. They're very fortunate to have that. But I think when it's a performance problem, is it a short-term or do you have deeper long-term problems? And I think that the boards give need to give their CEOs a chance to get the company on track and not be too quick on the trigger. But on the other hand, they can't wait too long. And so I think you're seeing boards being much more active than they were a decade ago. And I think that's a good thing. I think boards are taking their job very seriously today and making the moves they need to make to get the companies on track. So I'm not at all negative about this. I realize being a CEO is a lot tougher than when I was CEO 15 years ago.
It's going to be something to watch. Definitely there have been complaints about the dynamic being the inverse of what we've seen this year. Bill, Merry Christmas. Good to see you.
Same to you. Thank you very much.
Bill George.
Quick clarification from me on something I said last hour. I had said that I would be not here next year when I meant next week. Thank you for all the outpouring on Twitter, for the text as well. I will be here next year. And I'll be here for our next block of programming as well. So when we come back, it is the worst sector of the year. But our next guest thinks some names in the energy sector are poised for a rebound in 2020. We're going to explain next when Squawk on the Street returns.
Season to be hunched over your laptop. Not on our watch. In real life, you can feel your senses and your baskets. Feel all the sights, sounds, lols, and OMGs. Wear laughing emojis on actual smiley faces. Battery is running low. Take the kids to Santa's Grotto. In real life, you can find just the right present using the most advanced search engine in the world. Your eyes. We heart in real life. Brent Cross, London. Free parking for all sleighs and cars.
Ho, ho, ho. Who's made a list this year?
I want a new phone, one with amazing cameras, ultra-wide lens, of course, live focus video. Well, it has to be 5G ready to stream all my films. Can it come with something awesome to listen to them through?
Darling, I think he was talking to the kids.
Get everything you want and more. Purchase a Samsung 5G ready device and claim a pair of silver wireless Galaxy Buds at no extra cost. Shop our 5G handsets in store or online at your local O2 store or o2.co.uk. 18 plus. Offer excludes Galaxy Fold 5G. Purchased by the 25th of the 12/19. Claim from Samsung within 30 days. T's and C's apply.
Introducing a new podcast, ESPN Daily. When you want to go beyond your feed, when you want to get inside the score, when you want to get behind the highlight, there's ESPN Daily. Go deeper into the stories of the moment. Get the exclusive access and insider perspective that only ESPN can give you. ESPN Daily, hosted by me, Mina Kimes. Listen now to ESPN Daily on TuneIn.
With 2020 on the horizon, TuneIn continues looking back at the stories that shaped the 2010s.
In 2011, Osama bin Laden is captured and killed by U.S. Special Forces after a decade-long manhunt. In 2016, Donald Trump is elected the 45th president of the United States after securing 304 electoral votes over Hillary Clinton's 227. And in 2018, a UN report stating the world has 12 years to prevent irreversible climate change.
Search news on TuneIn to be listening when the next decade's big headlines break.
Hi, I'm Tom Haberstroh, host of the Haberstroh podcast. I'm partnering with TuneIn to answer a few questions and get you prepped for NBA Christmas Day. My favorite NBA Christmas memory is, I got to go with 2010 Heat Lakers. First year of the LeBron in Miami, going to the Staples Center against Kobe and the defending champion Lakers. Everything said the Lakers were going to win that game, but LeBron had a triple-double and blew out the Lakers. Search The Haber Show to listen to new episodes every Friday throughout the NBA season on TuneIn.
Energy is this year's worst performing sector in the S&P and the only sector which doesn't have double-digit gains for the year. But our next guest says he sees a buying opportunity in this industry. And he's here to share some of the names that he thinks will do well. Joining us now is Oakmark Select Fund Portfolio Manager Win Murray. Win, why energy in 2020?
Well, I got to start with a caveat. You never wake up in the morning wishing you have a chance to buy an energy company. At Oakmark, we're comparing all stocks against each other. We're not just looking at a particular sector. So we're comparing Apache to Microsoft to Merck. Energy has been a significant laggard, and more importantly, there's been a huge amount of underinvestment from a supply perspective. The price of oil is up 100% since 2016. The energy indices are down since then. We're basically seeing the market give us these companies at a discount to the runoff value of their existing fields.
And so within the industry, then, what attracts you the most in terms of the theme you just set out?
Well, so this is an industry that has a history of bad capital allocation. So one of the first things, given our holding period is 4 to 7 years, the way these companies deploy their cash flows is really important to the investment thesis. So we have to find management teams and boards of directors that think like portfolio managers. It's harder in this industry than in a number of industries. So that's the first criteria, and, it's a disqualifier if they don't. We're looking for companies with oil exposure. We think that's the part of the market that's likely to inflect. We think the clearing price of oil is going to prove to be higher than it currently is, and there's some companies with a lot of leverage to that.
So with energy stocks coming off, 2019, where they were among the worst performers this year, what are some of the individual names that you're focused on for 2020 in particular?
So some of the stocks that we like include Diamondback, Apache, EOG. These are companies run by excellent CEOs. They're essentially growing their oil production double digits, with the stocks having a mid-single-digit cash flow yield right now, despite below normal oil prices. So even if oil prices stayed flat, these companies would probably produce double-digit shareholder returns. But we think the amount of supply that's come out of the industry, the rig counts declining the way they have, the complete collapse in offshore is going to lead to an environment where the price of oil is actually, $10 or so higher, and they have a lot of leverage to that in their income statements.
Hey, Win, Journal did a piece this week about shale and banks tightening their credit lines, quoted some people thinking they might cut revolvers by 10%, largely affecting the smaller players. You buy that?
Yeah, that's the part of the cycle that we're in. And if you look at, you guys know how investing works. If you look at every investor who you've heard of who's had a successful 40-year career, they frequently deploy capital into industries where the capital markets have closed to them. Right now, we think that if you can find oil and gas companies with good management teams and balance sheets that will ensure survivability through potentially a prolonged downturn, because we don't know when the timing is going to be on this turn, you're getting paid pretty handsomely in terms of discount to value right now.
You talked about oil not being at a normal price. Why isn't this a normal price? And I heard your belief that you think it will go up this year. Is this just a play then on your part on your belief that oil prices will increase by $10?
So we think at the current stock prices, the companies that we invest in, like a Diamondback or an EOG, essentially could run off their existing reserves without growth CapEx, and we would end up doing fine. The increase in oil price would provide a lot of upside to our valuations. The last quarter showed an increase in demand for oil by 1.1 billion barrels a day, at the same time that the reserve replacement index is at its lowest level in 20 years. In a cyclical industry, when capital stops being deployed to it, it looks bad for a while, but then suddenly that incremental barrel is demanded by the market, and the price goes to the cost to get that out of the ground.
Right. So you don't think the Permian production is going to increase from here in 2020?
The technology there has been amazing. The production growth has been phenomenal. It's been one reason why this has been a terrible sector. But if you look at the decline rates of these wells and you look at the amount of capital that's required to maintain production at these levels, and you look at what you guys just said about how capital is getting cut off from this industry, it's difficult to see how you get the type of step function increase in supply that you've seen the past couple of years.
Win, thank you. Appreciate your time, and happy holidays.
Yeah, you guys too. Glad you're back next year.
Thank you.
We're all relieved, David. It's the best Christmas ever.
Yeah, I didn't know anybody actually cared. My own mother was like, really? You're leaving?
Now it's time for our ETF Spotlight. With less than 24 hours till Christmas, we're taking a look at the Spider S&P Retail ETF ticker XRT, now trading up about 0.5%. The group recovering over 18% from last year's Christmas Eve lows. Still, some of the market's weakest performing names since that December bottom, retail. Macy's, the biggest laggard of more than 42%, including other retailers like Gap, L Brands, Kohl's, and Tapestry.
Let's get a news update. For that, we'll go to Rahel Solomon back at HQ. Hi, Rahel.
Hi, Carl. Good morning. Here's what's happening at this hour. Pro-democracy protesters clashing with police at a busy Hong Kong shopping center. Some of the officers there were seen hitting people with batons as others pushed bystanders back. They also fired tear gas to disperse those protesters. Now to Indonesia's Sumatra Island, where a bus there plunged into a ravine. This is after its brakes malfunctioned. At least 28 people were killed, 13 more injured. The ravine is 262 feet deep. Officials said that the bus also crashed into a fast-flowing river after the driver lost control of the vehicle. Syrian government forces capturing a rebel stronghold amid airstrikes that killed at least 8 civilians when missiles struck a school that they took refuge in. This is according to opposition activists. And Prince Philip has left the London hospital where he spent the last 4 nights. The 98-year-old husband of Queen Elizabeth, as we can see here, did leave on foot and entered a waiting vehicle unattended and unaided. He will now join the rest of the royal family for Christmas at Sandringham House in eastern England. And that is our CNBC News update at this hour. I will send it back to you, Julia.
Thanks, Rahel. When we come back, the S&P is on pace for its best year since 2013, with only a week left of trading. Blackstone's Byron Wien will join us next on this record run when Squawk on the Street returns.
In every trip?
We can't make traffic move faster during rush hour. But we can help you catch up on the news with TuneIn. With live around-the-clock news from MSNBC.
In the UK, they're significantly worse. When the president gets up to the podium...
CNBC and Fox News Talk.
The Fox News poll sizing up the race for 2020 found that each of the 5 top Democrats...
You can use your stop and go for good by staying in touch with the world. Search news to hear what's happening now.
Hey, NFL fan, can't watch the game? Can't be there? No biggie. With your TuneIn Premium membership, you already have an all-access pass to every team and every game in the league. Amazing, right?
Steps up, floats it towards, at the goal line, it's intercepted!
Listen live as the action unfolds or on demand when you can. Anytime, anywhere, all season long.
Right side, it is caught. It is in for the right side for the touchdown.
Search NFL today.
Along the goal line, scores! It takes it home!
Hockey fans, the 2019-20 NHL season is here.
Here's Pietrangelo, he scores!
And you can hear the action live on TuneIn Premium.
The move, and a shot, they score!
From regular season action to the All-Star Game and through the Stanley Cup in June. Hear the home and away call for every game, for every team live. At home or on the go, never miss a game with the NHL on TuneIn Premium.
Upgrade today.
Be better informed, be better prepared. The Better Network is on TuneIn. This is Brent Musburger. Search BETR and start hanging out with me and my guys in the desert weekday afternoons. The Better Network is now on TuneIn.
Want to hear about the latest and greatest things to listen to on TuneIn? For reminders of the biggest live sports games, debates, and breaking news stories, follow @TuneIn on Facebook, Twitter, and Instagram to stay connected with the audio that matters to you.
The record highs for stocks aren't high enough. Our next guest says the market's still below fair value and that central banks have, in fact, fueled stocks' upward momentum this decade. Byron Wien is vice chairman of Blackstone Private Wealth Solutions Group and joins us here, help us close out the last couple of weeks of 2019. Byron, welcome back.
Always good to be here, Carl.
You were with us just after Thanksgiving, or maybe just before, and you did say the whole move of the market since 2008 is the result of monetary easing. You thought that 2020 would have the economy running above trend once again. Talk about what you see for the next 12 months.
Well, for the next 12 months, I think the market is in pretty good shape. It is not overvalued at these interest rates, so I think it still has room to go higher.
Journal today argues that the new normal, maybe 19 and a half times is the new normal. What do you think that number really should be?
Well, I think the market could sell at 20 times. Remember, stocks are related to interest rates. They compete with bonds, and with rates below 2%, a 20 multiple could certainly be supported.
Rates seem to be the most important thing. I don't want to put words in your mouth, Byron, but I've been listening to you for a long time. I mean, am I right?
Yeah. Interest rates are key. I mean, the geopolitical background is important too, but even that has been cleared up. We now have a phase one deal for China. Brexit has been resolved, or looks like it's going to be resolved. So, some of the clouds that were hanging over the market are no longer there, or at least they're not as dense as they were before.
So if you're reassured about a China trade deal, what are some of the biggest risks you see facing the market next year?
Well, we could have a rise in inflation that would drive interest rates up and would drive multiples down and would create risk in the market. We could have an election outcome in the market that would affect the market negatively, having one of the more progressive candidates get the nomination and actually win. But right now, I don't see any severe thunderstorms afflicting the market in 2020.
Byron, I always ask you this, try to characterize your concerns about deficits and the debt. You got an economy growing at 2, you got debt growing at 5. I mean, it's not a U.S. phenomenon, it's a global phenomenon. We had Greenspan on the other day who said, given deficits, inflation will inevitably rise, and he's had this stagflationary thesis for a while. When do you get concerned?
Well, nobody knows what that point is. One thing I've said, I think I've said on the program, Carl, is in the year 2000, the accumulated debt of the United States was $6 trillion, and the blended interest rate was 6%. So the debt service was $360. Now the debt is $22 trillion. The blended interest rate is a little over 2. The debt service is $450. So the debt is almost quadrupled, and the debt service has only gone up 25%. That can't go on forever. So eventually interest rates will rise, and that will create serious problems for the market. But I don't think that's a problem for the next year.
Byron, that's a great stat, and I remembered it from the last time when you said it. Only a $90 billion increase in our interest costs. But what it makes me think is we can't have interest rates go up. It's simply not a sustainable thing in any way for the U.S. budget for rates to go appreciably higher, because we'll be completely sunk in terms of interest payments and how much of the budget that takes up.
Well, I want you to get a good night's sleep on Christmas Eve, Carl. So let me take some of the...
That was me.
Oh, I'm sorry. I didn't realize that. So the point is that there's so much liquidity out there. In 2008, the central banks had about $3 trillion on their balance sheets. Now they have over $16 trillion. So there's a lot of liquidity out there looking for a place to hide. And that liquidity keeps interest rates down. So I don't think this is a clear and present danger. I think rates will stay low during 2020. But you're right to be concerned. At some point out there, rates are going to rise. And both the bond market and the stock market are going to have a tough time with that.
Byron, we've been looking through your predictions for 2019. Most of them turned out to be very accurate. One of them was that growth stocks would continue to provide leadership, with technology and biotech doing well. We certainly saw tech stocks have a banner year. I know you don't officially give your predictions until January, but can you give a hint about some of those sectors, particularly tech, after such significant gains this year?
Well, Julia, I've always been a growth stock investor. I'm a believer in it. I don't think earnings for the S&P are going to be up a lot next year, maybe 5%. And if that's the case, if you can find a growth stock with earnings up 15 to 25% at a reasonable multiple, I think that's attractive.
Byron, politics, come January, we're going to be focusing on Des Moines and New Hampshire. It feels like the market always does a little too much hand-wringing relative to the actual threat of policy, given all the things that would have to go right for things to be implemented after November. How do you think that's going to feel, come Super Tuesday? Well, look, Donald Trump is going to be in a trial relative to his impeachment. I don't think he'll be convicted. So he'll be the candidate for the Republican Party. I don't know who the candidate for the Democrats is going to be. But right now, I would have to say that Trump will be reelected because I don't see a Democrat candidate who can beat him. And so that means more of the same for the market. So the market is assuming there isn't going to be a serious political change in the United States. And that's why it's continuing to rise. Certainly explains a lot of the action over the last several weeks. Byron, our best to you and your family. It's always such a pleasure. We look forward to a lot more in 2020. Okay, Kyle, one point I'd make. I can't give you any of the surprises, but I can tell you one I didn't use because I had used something like it last year, and I don't do it 2 years in a row. Watch gold in 2020. It has a chance to be an interesting investment. Highest level today since November at 1,500. Byron, we're going to remember that tip. Thanks. We'll see you later. Okay, bye.
All right, we call that a tease. And by the way, speaking of teases, as we go to break, there's a look at the top stocks on the NASDAQ 100. The overall index, by the way, hit a new record high today. We have a lot more squawk on the street after this.
Start hearing more of what you want. Upgrade to TuneIn Premium and get over 45 commercial-free music stations, live commercial-free news, and every live NFL, MLB, NBA, and NHL game. Visit TuneIn.com/premium to upgrade.
Introducing a new podcast, ESPN Daily. When you want to go beyond your feed, when you want to get inside the score, when you want to get behind the highlight, there's ESPN Daily. Go deeper into the stories of the moment. Get the exclusive access and insider perspective that only ESPN can give you. ESPN Daily, hosted by me, Mina Kimes. Listen now to ESPN Daily on TuneIn.
Far wing, elevates, triple bucket.
The roar of the crowd. The shot clock ticks down. Will the ball go in? The suspense is pure torture, but you wouldn't miss this for the world. And the replays just don't cut it.
The sideline, the man fleet for three.
TuneIn Premium brings you every minute of the NBA season streaming live, so you can be there when it matters most. Hear it now, hear it live on TuneIn.
Pump fake in the lane, turnaround jumper from 8 feet is good on the
Search
right.
NBA today to start listening.
As we play out the 2010s, TuneIn's looking back at the music trends that defined the decade. The 2010s saw yet another revolution in the way we listen to music. With music fans giving up CDs and digital downloads for streaming services and internet radio like TuneIn. At the same time, vinyl sales continue to rise to levels not seen since the format's original decline. Keep listening to TuneIn for more trends of the 2010s.
Hey, NFL fan, can't watch the game? Can't be there? No biggie. With your TuneIn Premium membership, you already have an all-access pass to every team and every game in the league. Amazing, right?
Steps up, floats it towards, at the goal line, it's intercepted!
Listen live as the action unfolds or on demand when you can. Anytime, anywhere, all season long.
Right side, it is caught. It is in for the right side for the touchdown to Kansas.
Search NFL today.
Are you curious what others are listening to on TuneIn? Head to the trending section under Browse to see the most popular stations and podcasts among TuneIn listeners right now. Check it out. You might just discover something new for yourself.
The puck drops. 12 players face off to win. The suspense is pure torture, but you wouldn't miss this for the world. TuneIn brings you every minute of the NHL season. Listen live to hockey when it matters most on TuneIn.
Welcome back. Now let's get over to the CME Group in Chicago. And Rick Santelli with the Santelli Exchange.
Thank you, Julia. I'd like to welcome my guest, Peter Scher, Academy Securities. Peter, thank you for joining me on this Christmas Eve. I remember one of our first interviews in 2019. You talked about corporations going on a debt diet. What did you mean, and how do you think it turned out?
I think it turned out extremely well. What I meant was that a lot of these weaker BBB companies would focus on reducing their leverage, cleaning up their balance sheet a little bit, and we saw company after company do that, whether it was Budweiser, AT&T, Verizon, Newell Rubbermaid, Kroger, and the list goes on, and you're in much improved credit situation for all these companies, which has actually benefited the stock market as well.
All right, now we've looked at the side of the issuers. Now let's look at the side of the investors that like to buy the securities that they are issuing to clean up and deleverage and do it at lower rates. We've seen big supply, record year. We're probably showing the Barclays credit spreads right now, whether it's investment grade or high yield. Boy, they just keep narrowing and narrowing. On the investment grade, it's now under 100. Although, on high yield, even though the spreads have collapsed, which is a good thing, on the 20th of this month, Moody's said they're nervous. They warned of a frothy U.S. junk market. Weigh in.
Yes, I think first it's been a great year, and the more risk you took, the more you're rewarded. I think you want to be a little bit cautious here, particularly on the high yield side. One thing that I've seen over the past month is really what I see as short squeeze. So some of the weaker CCC credits, which is the really bottom end of the credit spectrum, I think they rallied a lot based on short squeeze positioning. So I think you could see a little bit of a pullback. So I think you want to be careful in high yield, a little bit careful in leverage loans, though right now I almost prefer the leverage loan market to the high yield market. But I would be taking profits there. I'd be reducing exposure to high yield right now.
Now, how much do central banks generically have to do with this global appetite, this insatiable appetite for investors? It's like they have a sweet tooth, and anything corporate is a big piece of chocolate. Does anything worry you here that we could have any quick changes in sentiment on the investor side?
Yeah, I really think both the Fed and the ECB have been incredibly supportive of the bond markets. If you look, credit spreads tightened in Europe, partly because we reinitiated QE. The ECB is buying corporate bonds. You're seeing American companies issue into that. In the U.S., you really saw 3 turning points in markets here. There were 3 periods where we were a little bit weak, and we bounced. First in December and January of last year, where the Fed really said, hey, no more hikes. Then they started doing the insurance cuts back in May and June, and then they started regrowing their balance sheet in September and October. I think the Fed is not going to be able to be supportive of the markets. I don't think we get any more cuts. I think they start talking about the maximum size of the balance sheet. So I think there's going to be some headwinds. So again, you want to be a little bit cautious and take some profits here. It's been a great year. It's going to be a little bit tougher this year going forward.
Peter, great to hear from you, especially considering how well you called this market. Happy holidays, Merry Christmas, Happy New Year to you and your family. Carl, back to you.
You too. Thanks a lot, Rick.
All right, guys, at the top of the hour, it is the day before Christmas, which, of course, means it's time for the traditional singing of Wait Till the Sun Shines Nelly. Our cash-in and the traders are getting ready to perform on the NYSE floor. That is coming up on Squawk on the Street.
With the kids jingle-belling and everyone telling you.
Sometimes the pressures of today's world can make it tough. When you're not listening to your team, take it to the end zone, the rim, or the net. Keep up with the biggest moments in sports by following TuneIn on social media.
Block, Cook into the end zone for the touchdown.
From reminders of the live top games to tips of the best sports stations and podcasts.
Welcome to Undisputed. We are live from Los Angeles. I'm Jenny Taft here with Skip Bayless.
Follow at TuneIn on Facebook, Twitter, and Instagram to get the most out of TuneIn.
This is not a commercial. This is a reminder. With TuneIn Premium, you could be listening to more music commercial-free. Get over 40 commercial-free music stations. Visit tunein.com/premium to upgrade.
The puck drops. 12 players face off to win. The suspense is pure torture, but you wouldn't miss this for the world. TuneIn brings you every minute of the NHL season. Listen live to hockey when it matters most on TuneIn.
Hey, NFL fan, can't watch the game? Can't be there? No biggie. With your TuneIn Premium membership, you already have an all-access pass to every team and every game in the league. Amazing, right?
Steps up, floats it towards, at the goal line, it's intercepted.
Listen live as the action unfolds or on demand when you can. Anytime, anywhere, all season long.
Right side, it is caught. It is in for the right side for the touchdown.
Search NFL today. You might already know that TuneIn allows you to listen to all the pro sports leagues wherever you go. But did you know TuneIn is also home to the wide world of college sports?
Open three, DeAndre Hunter got it! Handoff Carruthers, big hole right side. He leaps and he surges in, touchdown!
From live college football, basketball, and baseball games to podcasts and coaches shows fueling your love for the game in your school. And the best part is, it's all free. Search college sports to find your team or league. TuneIn is remembering the biggest college sports moments of the decade, like this one from 2018, when Texas kicker Cameron Dicker nails the game-winning field goal in the Red River Showdown against Oklahoma.
A 40-yard field goal try. Good snap and hold. The kick on its way, and the kick is good! It's good! Dicker, the kicker, comes through, and with 9 seconds.
Search college sports on TuneIn to be there for the moments that go down in history.
Far wing, elevates, triple bucket.
The roar of the crowd. The shot clock ticks down. Will the ball go in? The suspense is pure torture, but you wouldn't miss this for the world. And the replays just don't cut
The
it.
sideline, the Van Fleet for 3.
TuneIn Premium brings you every minute of the NBA season streaming live, so you can be there when it matters most. Hear it now, hear it live on TuneIn.
Pump fake in the lane, turnaround jumper from 8 feet is good on the
Search
right block.
NBA today to start listening.
Welcome back to Squawk on the Street. I'm Rahel Solomon. Stocks taking a bit of a pause during this holiday shortened trading day, with the S&P 500 trying for its 9th day of gains in the past 10 sessions. A mixed report card across the sectors. More cyclical groups like industrials and healthcare are dragging us lower. But then let's drill down now on one of the outperforming sectors so far today, and that's real estate. That group on pace for its 4th day of gains in the last 5. Also now tracking for its best year since 2014, and that's being boosted by falling interest rates. One of the reasons investors really like this, the dividend yield at 3.4%. That's nearly double the 10-year yield. And taking a look at some of the names leading us higher today, Vornado, CBRE, and Simon Property Group, with CBRE, by the way, trading within 1% of all-time highs. I'll send it back downtown to you guys. Julia.
Thanks, Rahel. Well, 'tis the season for shipping. Holiday e-commerce deliveries are on pace to shatter records this year. And as shoppers shift more to online shopping, on-time delivery is more important than ever. So where do shippers stack up on the naughty or nice list? Frank Holland is here with a report card on the shipping wars.
Hey there, Julia. You know, with a 99.8% on-time delivery rate, UPS was the best performer of the major shippers last week. Of course, that was the final full week before Christmas and Hanukkah. The big four, Amazon, UPS, FedEx, and the Post Office, were separated by a few tenths of a percent. Keep in mind, anything over 95% 1% is considered good. But we're talking about holiday package, and every 1/10% below 100%, that actually equals 86,000 packages that did not arrive on time. So during the holidays, sometimes good just really isn't good enough. For the entire holiday season, new data shows deliveries are expected to exceed 2.5 billion packages between Black Friday and New Year's Eve. That's a record amount, and it will be done in just 33 days, the shortest period of time possible between Thanksgiving and Christmas. For the full holiday peak, UPS also leads for on-time delivery. Now, some of that holiday volume includes returns, including the growing category of returns of items that people bought gifts basically for themselves during sales. Returns are expected to increase by $5 billion for the third consecutive year, putting additional pressure on all of these networks. Yesterday, that was the deadline to send a package and still make it in time for Christmas for all the shippers except for Amazon, the tech giant offering free same-day shipping tonight for orders over $35 in 42 cities as long as they're placed by 9:30 a.m. local time. Back over to you.
All right, Frank, thanks so much for that. Thank you. When we come back, we'll have a lot more on what Travis Kalanick leaving Uber's board means for the future of the company. Pretty muted range this day before Christmas as we got a shortened session. Stocks close at 1, Dow's down 20. Squawk Alley starts in a moment.
How's work? If you're not loving your job and you're getting those Sunday blues, now's the time to make a change. With a LinkedIn app, it's now easier to find and land the job meant for you. There are millions of jobs on offer, and the LinkedIn app helps you hear about them first. Research shows applying within the first 10 minutes increases your chances of hearing back by up to 4 times. Stay in the know and grow your career. Download the free LinkedIn app today.
Hey, NFL fan, can't watch the game? Can't be there? No biggie. With your TuneIn Premium membership, you already have an all-access pass to every team and every game in the league. Amazing, right?
Steps up, floats it towards, at the goal line, it's intercepted!
Listen live as the action unfolds or on demand when you can. Anytime, anywhere, all season long.
Right side, it is caught, it is in for the right side for the touchdown.
Search NFL today.
As we play out the 2010s, TuneIn's looking back at the music trends that defined the decade.
That's why I need a one dance.
The 2010s was the decade of the surprise album drop, where artists from Beyonce, Drake, and Frank Ocean to Radiohead, U2, and the late David Bowie skipped the traditional promotion cycle to bring their music directly to fans with little to no warning. Keep listening to TuneIn for more trends of the 2010s.
A lot of people aren't aware that TuneIn lets you listen to the same terrestrial stations that you pick up on your FM AM dial, except you can hear them from anywhere. To see all the stations broadcasting in your area, find the local radio section on the home screen. Keep it local with TuneIn.
With 2020 on the horizon, TuneIn continues looking back at the stories that shaped the 2010s.
In 2011, Osama bin Laden is captured and killed by U.S. Special Forces after a decade-long manhunt. In 2016, Donald Trump is elected the 45th President of the United States after securing 304 electoral votes over Hillary Clinton's 227. And in 2018, a UN report stating the world has 12 years to prevent irreversible climate change.
Search news on TuneIn to be listening when the next decade's big headlines break.
Hi, I'm Tom Haberstroh, host of the Haberstroh podcast. I'm partnering with TuneIn to answer a few questions and get you prepped for NBA Christmas Day. I wanted to start an NBA podcast because I wanted to take you behind the scenes and hear it from the people that make the NBA tick. It's the most intimate platform for the most intimate sport, and podcasts are the perfect medium to capture that intimacy. Search The Haber Show to listen to new episodes every Friday throughout the NBA season on TuneIn.
Good morning. It is 8 a.m. at Uber's headquarters in San Francisco. It's 11 a.m. on Wall Street, and Squawk. Morning, welcome to Squawk Alley. I'm Carl Quintanilla at Post 9 with David Faber and Julia Borston. John and Morgan have the morning off on this Christmas Eve. It is a Christmas tradition here at the NYSE. Let's send it over to Bob Pisani, Art Cashin, and the traders for the singing of Wait Till the Sun Shines Nelly. Bob?
Yes, it started in the 1860s. That was the start of continuous trading, Carl, when there was a tradition of singing rather raucous barbershop quartet carols on the floor of the New York Stock Exchange during Christmas and New Year's. It changed a little in the 1930s. Tough times down here in the rest of the country. The songs got a little more sentimental, a little more maudlin, but there's one that survived all of them. Here in his 55th year on the floor of the New York Stock Exchange, Art Cashin leading Wait Till the Sun Shines Nelly. Arthur?
On the count of 3. 1, 2, 3.
Wait till the sun shines Nelly, and the clouds go drifting by. We will be happy, Nelly, by and by. Down Lover's Lane we'll wander, sweethearts, you and I. Wait till the sun shines, Nelly, by and by.
All right, terrific. Merry Christmas, everybody. Merry Christmas. And one of the traditions is to bring children and grandchildren down on the floor. And there's a number of them here today. Tell me your name.
Shannon Spadaro.
And you were the daughter of a retired member, right?
Yes.
What is it? Or his name?
Michael Spadaro.
And do you know why the New York Stock Exchange is important in American history?
It makes new companies and businesses.
That is the right answer. Congratulations. Thanks very much. Mike Pastillo, one of the big traders down here for GTS Specials, does all the retail stocks, and your work all throughout the year keeping the markets moving and keeping liquidity in the market.
Thank you, Bob. Merry Christmas.
Merry Christmas to everybody. And Arthur Cashin, 55th year, on 55, to start December, in fact, almost this day, 1964, you signed the book.
That's correct. In the same book as John D. Rockefeller and J.P. Morgan. They're just a touch older than I.
And let's hope you're going to outlive all of them by a long, long way. Arthur, thanks very much. Merry Christmas to everybody. And thank you all for coming down for a great tradition that goes back 150 years. Guys, back to you.
Really one of the great moments of the year for the family that works in and around the NYSE. Bob, thanks so much for that. It is the final chapter in a bumpy ride for Uber. The former CEO and co-founder, Travis Kalanick, leaving the company's board of directors. For that, we're going to turn to Josh Lipton this morning. Josh?
So that's right, Carl. And in a statement, Travis Kalanick saying, Uber has been part of my life for the past 10 years. At the close of the decade, and with the company now public, it seemed like the right moment for me to focus on my current business and philanthropic pursuits. Kalanick was a brash, aggressive, competitive founder that helped transform Uber into the ride-hailing giant that it is today. But he was also blamed for cultural problems at the company and was ousted as CEO back in 2017 amid a series of scandals. He was there with you guys at the NYSE during the company's IPO in May, though he was not on the dais with the company's other executives. This news coming as Kalanick has now sold his entire stake in Uber, or roughly $3 billion worth of stock. Analysts say that has been a big overhang on the stock, which is about 30% below its IPO price of $45. Still, 65% of analysts covering Uber right now do rate it a buy, and I caught up with one of them this morning, Evercore's Benjamin Black. He says this news today is an incremental positive, in his opinion, that it could be perceived, he says, as benefiting the reputation of the company, a further sign that it's shifting away from the old guard with a complete fresh start here. Guys, back to you.
Yeah, Josh, we should point out, I think the board still has Garrett Camp, who was one of the co-founders, obviously not as well-known a name as Mr. Kalanick. Ursula Burns, who I think came in during that period of transition. Well, the board really changed dramatically then. But there aren't as though there are still people on that board, at least who've been with the company for some time, like Mr. Camp.
And we'll see, how much confidence, David, I think your point is well taken, that gives investors. With that board, they certainly have a lot of challenges in front of them. We mentioned the stock price, and why is that? Why is it down? Because there are real headwinds this company still does face in terms of regulatory challenges, AB5 out here in California and London, certainly competition in Europe and Latin America. But, you talk to bulls. I mentioned I spoke to one of them this morning, and the majority on the street are bullish. They'll say, listen, a lot of those concerns at this point are priced in their opinion, and this company, of course, did lay out that path to profitability in 2021, and you see the stock moving higher here a bit in today's trade, guys.
Josh, I'm wondering, as Travis Kalanick focuses on cloud kitchens, which is his new startup, I believe a valuation of over $1 billion, is there concern that could turn out to be real competition for Uber Eats? I mean, he's starting in a different piece of it, but could it go into the direction that Uber Eats is focusing on?
I don't know, Julia. It's not, Cloud Kitchen is not a company I've covered extensively. I mean, I think that, you would certainly be concerned about any competition when you have a name like Travis Kalanick in there. We've mentioned the problems he was blamed for. At the same time, ask yourself, do you think Uber would be where it is today without a guy like Travis Kalanick at the helm? At that time, at that place, given how competitive he is, how well connected and ambitious he is, we'll see how it plays out.
Yeah, and we'll keep an eye on that Uber Eats business, of course, important part of that. Closing down or selling potentially in India certainly gave the stock a bit of a boost a week or so ago. Josh, thank you. Josh Lipton. Of course, it's been a strong year overall for tech stocks, not including Uber. The S&P, that sector leading the S&P. Joining us now is Wolfe Research Managing Director Steve Milanovich and WireX Portfolio Manager Paul Meeks. Paul, let me start with you. Your fund's had a good year. Can you continue it, and will the composition of your top 10 names continue to perform or outperform next year?
Good questions. The first thing I would say is, with our fund on the precipice of being up 40% as we get into the end of 2019, I can't tell you with much confidence that it's going to continue. Now, I don't make a fundamental call. I actually think the fundamental underpinnings for tech are not sterling, but they're okay. But man, a 40% return in a single year is not what I expect going into 2020. I would ask people, frankly, and just being honest, to be very cautious. As far as my mix of my holdings, I would tell you that I continue, and I expect to continue, to favor semiconductors and semiconductor capital equipment within the technology sector. I think that they're not necessarily cheap stocks, but we have the greatest momentum there, and that won't necessarily stop on a dime on December 31st. It'll continue.
Yeah. Paul, real quick, just kind of technical question from me here. I mean, I'm looking at a chart of the fund, and as you say, it's done very, very well. But you had a fairly precipitous fall sort of in mid-December. Was there a reason for that in particular?
Yeah, so I took over the fund at the beginning of November of 18. And of course, you step right into a single quarter bear market in the fourth quarter of 18. Had a nice move back upwards. Actually stumbled a bit in the spring of this year, but has really saved our year and gave us a lot of momentum going into 2020. Was the move that we put on going overweight semiconductors and semiconductors capital equipment after they got smacked in that springtime period.
Got it. Steve, give me your take. Do you agree with Paul that perhaps the semis are a place to continue to look in terms of at least them being an area of potential outperformance next year, such as Micron and AMAT?
No, I generally agree with Paul, though I am a little bit more cautious on the semiconductors. They've been the clear outperformer this year and really have anticipated the upturn that's supposedly coming much earlier than they have historically. Micron continues to try to call the bottom, but we still have inventories that are relatively high. I think there's been some pull forward of demand that might become a little more obvious in the next 1 to 2 quarters. Longer term, it's a great place to be. It's very clear that if there's value in hardware, it's in the semiconductor companies, not in the traditional systems companies. His caution, I think, makes a lot of sense going into the new year. Paul and I worked together at Merrill Lynch in 2000, so we've seen the bubble. And while I don't think we're in a tech bubble per se, there are some extreme numbers out there. There's a lot of overbought stocks. Central banks are extremely easy, which at some point is going to come home to roost. So from a trading perspective, I would be a little bit cautious going into the new year. We tend to prefer software and services.
So shifting over to the FANG stocks, a number of these stocks have had quite a run. Netflix, perhaps less so, but Facebook really shrugging off all those regulatory concerns. There have been calls to break up Amazon as well as Facebook. How much are you looking at the regulatory risks as a factor that could come into play for those FANG stocks in particular?
I mean, regulation's clearly top concern for investors. Looking at these names, it probably reduces their ability to do M&A, which takes away a bit of optionality. But I have to say, when you look at names like Google and Facebook, they look, pretty well valued. I mean, they're fairly cheap given their growth rates. And the thing that usually gets you as a leading tech company is disruption, new technologies that disrupt your position. We're talking about new technologies like AI, Internet of Things. I don't see those disrupting these companies. In fact, they're leaders. So I think the regulation is a bit of a cloud. It's going to take some time for that to play out, but it wouldn't scare those names out of my portfolio.
Hey, Paul, big story today about Huawei and the U.S. trying to warn the U.K. That the firm is a security risk to MI5 and MI6. Just one example of this this brewing sort of internet Cold War. I wonder how complicated you think that makes tech investing in 2020, and are we sort of overthinking the implications of that right now?
Well, specifically to Huawei, I continue to be worried, and I continue to think that the way the U.S. has discussed the threat or potential threat of Huawei is grossly exaggerated. One of the things that I worry about is obviously the big theme and the big driver in tech over, I don't think it's necessarily a 2020 phenomenon, but going beyond that is the transition to 5G. And if we continue to have this brouhaha with the Chinese, believe it or not, they're going to come out on the other side with a 5G lead, and it could be unsurmountable. And so I really would love to see this cleared up, because I think it is a very big deal and something to watch, particularly over the next couple of years.
Within your portfolio, when you talk about 5G, Paul, what would you say is sort of the purest way to play the growth of 5G, regardless of whether the Chinese have a lead on us or not? We all know it's here. It's going to only grow in importance. Is there a name or two that you think and look at for next year that's a good way to play it if you believe there is significant growth to come?
Excellent question. The way I look at it is, again, I don't think it's a 2020 phenomenon. I think it's a late 2020 into 2021 phenomenon. And I still would go with the semiconductor companies. Micron, and as far as DRAM and NAND flash. And in the semiconductor capital equipment side, my favorites are Applied Materials and Lam Research. I would focus on those rather than anything to do with the hardware, and particularly the handset suppliers, because that's where I think you might see some disappointment.
Do you think we'll see any impact of 5G in terms of it reaching the consumer and all the ripple effects that could come next year, or will it really not come until 2021?
I think it's stacked into the second half of next year earliest. One of the things that the bulls are talking about as it pertains to technology and technology drivers is essentially assuming that 5G is here, and 5G is a aggressive ramp starting January 1st. I don't see that. I think maybe it's an aggressive ramp starting January 1st of 2021, and so I think there could be some disappointment. So to answer your question directly, very late 2020, in size in 2021.
And Steve, finally, at the end of each year, I feel like we look back and we say, well, or we look ahead, actually, and we say technology shares may be overvalued a bit. Certainly some of the names within it. They've had such a great run over the last year. Next year's got to be a tough year. And then the year comes to an end and you look at your portfolio and what outperformed, it's always tech. Are we going to just find the same thing next year? Is it just sort of a rule that really you've got to overweight tech in general?
I think in the long term, that's probably right. Tech has given us a 17% annual return over the last 25 years. So betting against tech generally hasn't worked too well. So even though we're a bit cautious in terms of the near term, if the market's up high single digit, which Chris Senek, the Wolf equity strategist, is looking for, it should be a decent year for technology. technology is only becoming more important. It's not just within technology, but it's affecting every other industry. I talk to friends in private equity, and one says when they buy a company, he goes to the CEO and says, whatever business you think you're in, you're a tech company. So it doesn't mean every tech company is going to do well, but trends like 5G, platform, and cloud still have some real legs.
Yeah, and we'll be watching them all closely. For now, though, we'll leave it there. Guys, thanks to you both.
When we come back, ride canceled. Former Uber CEO Travis Kalanick leaving the board of the ride-hailing service he founded. Plus, Newman's new money. We'll tell you how the former WeWork CEO's exit package could get sweeter. Chegg CEO Dan Rosenzweig is with us to discuss that and more. Squawk Alley's back after this.
Spend Christmas Day listening to the NBA on TuneIn Premium. Featuring 5 big matchups on the holiday schedule. Unwrap the action starting at 12 Eastern when the Celtics take on the Raptors in Toronto, followed by the Bucks and the 76ers at 2:30. The holiday cheers continue with the Rockets and Warriors at 5 and the Clippers and Lakers at 8. And a showdown between the Pelicans and Nuggets at 10:30. 'Tis the season with the NBA on TuneIn Premium. Upgrade today.
As we play out the 2010s, TuneIn's looking back at the music trends that defined the decade. The 2010s saw yet another revolution in the way we listen to music. With music fans giving up CDs and digital downloads for streaming services and internet radio like TuneIn. At the same time, vinyl sales continue to rise to levels not seen since the format's original decline. Keep listening to TuneIn for more trends of the 2010s.
The puck drops. 12 players face off to win. The suspense is pure torture, but you wouldn't miss this for the world. TuneIn brings you every minute of the NHL season. Listen live to hockey when it matters most on TuneIn.
Smart Sports Wagering Talk is now on TuneIn. This is Brett Musburger. The Better Network is now on TuneIn. Search BETR. Be better informed. Be better prepared. And remember, cash and tickets is what it's all about.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Upgrade to TuneIn Premium and get over 45 commercial-free music stations. You'll also get live commercial-free news, plus live play-by-play games from NFL, MLB, NBA, and NHL. Visit TuneIn.com/premium to upgrade.
Welcome back to Squawk Alley. After a very long, bumpy road, former Uber CEO and co-founder Travis Kalanick leaving the board effective December 31. In the announcement this morning, Kalanick says he's going to be focused on his current business and philanthropic pursuits. Current Uber CEO Derek Khosrowshahi, who took over for Kalanick in 2017, writes, quote, "Very few entrepreneurs have built something as profound as Travis Kalanick did with Uber. I'm enormously grateful for Travis's vision and tenacity while building Uber and for his expertise as a board member. Everyone at Uber wishes him all the best." Joining us at Post 9 today, Chegg's president, CEO, co-chairman Dan Rosenzweig is with us, who can talk about all kinds of aspects regarding tech. Happy holidays to you.
Merry
Dan,
Christmas to everybody. It's Christmas Eve.
Yes, it is. Do you think he's going to be missed on the board or not?
No, I think he's been checked out for 2 years. You know, there are founders that stay forever, and that's the only thing they're ever going to do. So whether it's, Zuckerberg or Larry Ellison or Bill Gates and Jeff Bezos, and there's very few of them, and if they can stay that long, they become the most successful that you've ever seen. A guy like Travis is more like a serial entrepreneur. He founded a company before this. He founded Uber. He founded another one, which may be worth more than Uber in a short period of time. So I think Travis left, mentally years ago, fought the battle, lost the battle, moved on. And I think Uber has been running itself the way it wants to.
It doesn't mean you can't have a symbolic stake, right? Why do you have to sell every single share?
Why do you have to keep it when they fired you? I mean, it's if you're Travis, he's got bigger things to do. He built Uber, everybody knows it. And then he's building another company that may be worth more. So why would he stay?
It's interesting because I know you've been in Silicon Valley for a while, and it seems like we've seen, record CEO departures this year, but particularly in Silicon Valley with WeWork, Adam Newman's getting pushed out. There just seemed to be this long list of CEO transitions, and Reid Hoffman has talked about startups having to shift from being the pirates to the Navy. Do you think we're seeing a fundamental shift in Silicon Valley right now as boards and companies are pushing their leaders to transition to be grown-ups faster and earlier?
Well, that's depressing. And I will point out WeWork's in New York. But the answer is yes. Look, every company goes through phases. The same way as public company investors, there's growth companies, then there's GARP companies, then there's value companies, and you have to go through these transitions. In fact, I had lunch with Dan Benton yesterday, who sort of walked me through the transitions of public companies, where Apple is now, it's not a growth company anymore, right? It's a value company, as is Google, strangely enough. But the reality is, it takes a different kind of skill set to manage a company at a different phase. And so somebody like Travis is brilliant at taking an idea and getting people to buy into it and getting the capital for it and driving through every conceivable wall and ignoring every conceivable obstacle. But then when you have to build a supporting structure and you have to build a culture that can support it and you have to follow all the regulations, it's better for somebody else to do it. And I think that is the norm. And you're seeing a bunch of refounders, by the way, Shantanu Narayan, John Donahoe, Chuck Robbins, people that didn't found those companies who've actually created more value as CEO than the founders did when they were founders. Dan Schulman at PayPal are examples. So I think it's a formula people in Silicon Valley didn't believe in. Now they're starting to believe in.
You didn't found Chegg.
I did not found Chegg.
But look what you've done in terms of creating value.
It's been 10 years since I've been the CEO of
You're
Chegg.
kidding. It's
10
been
years.
Yeah, and I haven't aged a bit, which is remarkable. As long as you're not using HD on the camera.
Well, we should point out it's almost a $5 billion market value. You've seen some highs earlier this year, but very good performance overall. Stock up 52%, Dan. Well done.
Thank you.
I want to come back to Zuckerberg for a second, if I can. Mention him in terms of founders, obviously, who are still ironclad control. I look at the year this company's had publicly in terms of at least its profile, and then in the markets up 57%. But I wonder next year, what do you see? It does feel like there are a lot of different forces aligning against Facebook.
There are. It's pretty amazing because here's a company who creates a bunch of jobs, not only for people that work for Facebook, but people who make a fortune doing business off of Facebook. It obviously had some stumbles. Some of them were self-inflicted. Some of them they were late to understand. But they're a pretty great management team, and they run an extraordinarily efficient business. So I think what the market sees is, if you're there aren't very many companies left in the advertising business. It's really Google, now Amazon, and Facebook. And so if everything is going to go to digital and targeting is what works, Facebook's going to win in the public markets. But I do think that it's evolving and needs to do a better job, and is doing a much better job at understanding the pressures that are coming literally from everywhere in every country in the world.
But Mark Zuckerberg has talked a lot about how, especially next year, they're going to focus on a transition away from the newsfeed and ads in the newsfeed towards communication, secure, encrypted communication. Are we underestimating how much that's going to hurt the advertising business, or is that sort of an exaggeration of how big a shift that's going to be?
It's a great question, and I don't really know the answer. What I believe is you can't make that transition in a year. So, everybody uses WhatsApp, everybody uses Facebook Messenger. I don't know. It depends how deep they get into commerce. It depends on, you see Instagram stories. You can call it advertising or you call it e-commerce, but that has been one of the most successful new initiatives that Facebook has done, is buying things right off of Instagram. I've done it this holiday season, and I can only say that because I'm sure my wife's not watching. But I think it's not going to happen. I think it's an effort that they're going to put forth, but I think the business model is not going to change that much in 20. It's too dramatic to change. And honestly, advertising needs a place to go, and Facebook is the place that it goes.
Yeah, but they're going to be at the center of a political storm conceively this coming year with the presidential election, with his decision that free speech means you can still say whatever you want when it comes to political advertisement. It's hard to imagine next year's not going to be even more complicated.
I don't envy them. Look, I'm huge fans of theirs. That's no secret. And I think that the management team there is fully capable of handling this. But this is not easy. No one's ever had to deal with it before. What if you had the largest platform of communication in the world, and it was built for good, and everybody who wants to do bad has figured out how to take advantage of it? That doesn't get fixed overnight. And so they're doing a lot to do that. I think the question over advertising, targeting, the politicians don't want them to remove political ads because they benefit from it. So I think there's a lot of hyperbole going on, but
no, it's a collective action problem, and remedying it means turning your back on the street to some degree, whether it's increased costs because of human curation or not taking ad revenue, right? It's hard to imagine them doing that right now.
I think they're going to always take ad revenue. I think how they take it and what percentage of the people take it and whether e-commerce or payments or communications becomes an additional business, just because they may not emphasize the news feed as much. One of the reasons you don't emphasize it as much is it already has too many ads, right? The economics of the ad business, the internet, are really straightforward. If you don't have huge volume and number of ads on a page, you don't make a lot of money. They have probably too many ads on the page.
Dan, I have to ask you about the IPO market next year. I know you know a lot of the founders who are on this path towards an IPO, a lot of expectation of an Airbnb IPO, but a lot of this year's IPOs really fell flat.
All of them.
What do you think is going to happen next year in the IPO market? And will we see more direct listings or maybe some more caution?
So you're probably going to see all three depending on the comfort level that the company has with its own cash situation. So there are investors who've been in companies like Airbnb a very long time, and they have funds that need to return, and that puts a bunch of pressure on the founders to take the company public. I think you take a direct listing when capital isn't your problem. So if you don't need capital, then there's no reason to do that and pay all the fees. And I think Barry McCarthy sort of reinvented that at Spotify, and you see what happens with Slack. But most companies that go public need the capital. And so I think you're going to see more traditional ones. And the reality is we're still going to have to clear through some overvalued private companies versus public company markets. But I think they're all going to come to market because I'm not sure many of them have a choice anymore. Right? The number of investors you have, how long your investor's been in, whether you need capital, the employee pressure to get liquidity. These are all realities now that founders can't run from.
Airbnb 2020, yeah.
That's my understanding from listening to what they have to say. Look, there's a company that has done a brilliant job of staying quiet. There's a company that's done a brilliant job of every time they have something happen, immediately not being afraid to change their business model. But, they are going to have more competitors, and you see that now. And so I think going public can only help them. The longer you wait, it doesn't get easier, right? There is a point where you miss that window, and I think
others figure out.
Yeah.
They figure it out, and then your model slows down, and then your Uber is a perfect example of that. Lyft's a perfect example. Almost everybody that went public this year is down about 40%. So, but, it doesn't mean they're not great companies. It just means that there was a misunderstanding of valuation.
Dan, great to have you, as always.
Merry Christmas Eve, everybody.
Hey,
Happy holidays.
Dan. Well done.
Ed Rosenzweig.
All right, up next we got, it's been a tough year, at least for SoftBank. Speaking of Uber, of course, one of its largest, if not largest shareholders. We're going to tell you what's in store for 2020. Squawk Alley's back after this.
The flock. You know it's out there somewhere, but you just keep missing out. I'm talking about your dream job. Now it's easier to find and land your next role with the LinkedIn app. Build connections, keep in touch, and be the first to hear about new jobs. LinkedIn has more openings than applicants. And sometimes all it takes is one LinkedIn connection to land the job that's right for you. Don't miss out. Get your next big break and find the job meant for you. Download the free LinkedIn app today.
TuneIn is remembering the biggest college sports moments of the decade, like this one from 2018, when Alabama's Tua Tagovailoa throws the game-winning touchdown in the national championship against Georgia.
Loads up, looks long, throws, end zone, touchdown! Alabama! Devontae Smith! Touchdown, Alabama! And the Crimson Tide has once again ascended to the top of the college football.
Search college sports on TuneIn to be there for the moments that go down in history.
As we play out the 2010s, TuneIn's looking back at the music trends that defined the decade.
Don't believe me, just watch.
The 2010s saw the rise of the viral hit when meme-ready tracks like Gangnam Style,
Oppan Gangnam Style,
The Harlem Shake, What Does the Fox Say?
What does the fox say?
And of course, Old Town Road snowballed from internet oddities to global phenomenons.
I got the horses in the bag. Horse stock is a tag.
Keep listening to TuneIn for more trends of the 2010s. Start hearing more of what you want. Upgrade to TuneIn Premium and get over 45 commercial-free music stations, live commercial-free news, and every live NFL, MLB, NBA, and NHL game. Visit TuneIn.com/premium to upgrade.
Hey, NFL fan, can't watch the game? Can't be there? No biggie. With your TuneIn Premium membership, you already have an all-access pass to every team and every game in the league. Amazing, right?
Steps up, floats it towards, at the goal line, it's intercepted!
Listen live as the action unfolds or on demand when you can. Anytime, anywhere, all season long.
Right side, it is caught. It is in for the right side for the touchdown to Keenan.
NFL today.
The Better Network is now on TuneIn. This is Brent Musburger. Search the Better Network. That's the BETR network. And then let us get you better prepared to better enjoy the day in sports. The NFL, college football, basketball, hockey, baseball. Sharpen your edge. The Better Network is now on TuneIn. Be better informed. Be better prepared. Search the Better Network. That's BETR.
Want to hear about the latest and greatest things to listen to on TuneIn? For reminders of the biggest live sports games, debates, and breaking news stories, follow @TuneIn on Facebook, Twitter, and Instagram to stay connected with the audio that matters to you.
Welcome back to Squawk Alley. I'm Rahel Solomon, and here's what's happening at this hour. President Trump talking down speculation that North Korea is planning a long-range nuclear test, telling reporters at Mar-a-Lago that the U.S. will find out what the surprise is and deal with it successfully.
We'll see what happens. Well, let's see. Maybe it's a nice present. Maybe it's a present where he sends me a beautiful vase as opposed to a missile test. Right? I may get a vase. I may get a nice present from him. You don't know. You never know.
Russian President Vladimir Putin says that Russia is the only country in the world that has hypersonic weapons. Speaking at a meeting with top military brass, he said that for the first time in history, Russia has an edge in designing a new class of weapons. And staying overseas, a promotional Christmas event at a shopping mall in Australia quickly got out of hand, ending in a stampede earlier today. So this occurred after an event billed as the ultimate balloon drop led to shoppers scrambling for free gifts. Some suffered injuries, 5 were sent to the hospital. So apparently they had gift cards inside of those balloons, and that's what led to the stampede. Apparently some kids were also hurt in that stampede. So you are now up to date. That is our CNBC News update for this hour. Let's get back to Squawk Alley. Julia, I'll send it over to you.
Thank you, Rahel. Well, SoftBank reportedly hitting a wall and securing bailout financing for WeWork from the 3 biggest Japanese banks. Here's Deirdre Bosa with a look at the biggest challenges facing SoftBank in the new year.
This past year was a wild ride for SoftBank and its Vision Fund portfolio companies. So here's what to watch from the company's CEO, Masayoshi Son, and his team in 2020. First, it could take longer to raise Vision Fund 2. After high-profile flops like Uber and WeWork, SoftBank may struggle to get outside investors to sign on and announce a major close. SoftBank could also up its own investment in the fund or face a fund that is smaller than the targeted $108 billion. Second, we could see SoftBank push more collaboration and even consolidation among Vision Fund portfolio companies. Masa-san has said that the Vision Fund is an ecosystem where mutually beneficial relationships are fostered. With a greater drive toward profitability, that goal could take on greater urgency. Third, the Vision Fund headaches aren't over yet. Masa-san has warned that there could be WeWork-like problems surfacing in other portfolio companies. Next year, trouble could brew in investments, particularly in China and India.
Got to get Masa back on camera, David. Talk about how he's going to do this.
I would love to. Yeah, we talked last March, of course. That was before a lot of this came. But listen, anybody listening to that hour-long sit-down we did certainly would be able to have identified that he thinks about things differently than many other people in a long-term way and has an approach that's unusual. we'll see what the new year brings, but obviously people always come back, Julia, to the great investment. All you need is one Alibaba.
But he has poured so much money into so many different companies. I hear from a lot of folks on the West Coast about the SoftBank effect and how it really changed sort of the scale of investments and the growth pattern of a lot of these companies. And if there is a real pullback, that's going to have a huge impact as well.
Yeah.
Well, they say your ability to withstand pain is a superpower, and he does have that in spades. When we come back, Apple's up 80% for the year. It's doubled from its lows. What could drive the stock higher in 2020 when Squawk Alley continues?
Johnson & Johnson.
TuneIn is remembering the biggest college sports moments of the decade, like this one from 2016, when Tennessee quarterback Josh Dobbs throws a Hail Mary to the end zone as time expires against Georgia.
4 seconds to go. Dobbs drops back, looks, loads up, fires long for the end zone. The pass is going to be caught by Tennessee.
Tennessee wins!
Caught it by Tennessee. Jawan Jennings. Jennings makes the catch in the end zone on the Hail Mary.
Search college sports on TuneIn to be there for the moments that go down in history.
When you're not listening to your team, take it to the end zone, the rim, or the net. Keep up with the biggest moments in sports by following TuneIn on social media.
Block, Cook into the end zone for the touchdown.
From reminders of the live top games to tips of the best sports stations and podcasts.
Welcome to Undisputed. We are live from Los Angeles. I'm Jenny Taft here with Skip
Follow
Bayless.
and TuneIn on Facebook, Twitter, and Instagram to get the most out of TuneIn.
You might already know that TuneIn allows you to listen to all the pro sports leagues wherever you go. But did you know TuneIn is also home to the wide world of college sports?
Open 3, DeAndre Hunter got it! Handoff Carruthers, big hole right side. He leaps and he surges in. Touchdown!
From live college football, basketball, and baseball games to podcasts and coaches shows fueling your love for the game in your school. And the best part is, it's all free. Search college sports to find your team or league.
As we play out the 2010s, TuneIn's looking back at the music trends that defined the decade. The 2010s saw yet another revolution in the way we listen to music. With music fans giving up CDs and digital downloads for streaming services and internet radio like TuneIn. At the same time, vinyl sales continue to rise to levels not seen since the format's original decline. Keep listening to TuneIn for more trends of the 2010s.
Far wing, elevates, triple bucket.
The roar of the crowd. The shot clock ticks down. Will the ball go in? The suspense is pure torture, but you wouldn't miss this for the world. And the replays just don't cut
To the
it.
sideline, the man fleet for 3.
TuneIn Premium brings you every minute of the NBA season streaming live, so you can be there when it matters most. Hear it now, hear it live on
Pump
TuneIn.
fake in the lane, turnaround jumper from 8 feet is good on the
Search
right block.
NBA today to start listening.
Welcome back to Squawk Alley. A very Merry Christmas for Apple. The stock surging over 80% just this year. Meanwhile, the company's new wearable device, the AirPods Pro, a big hit with customers. The product is now on back order and can take as long as a month to get delivered. Joining us now here at Post 9 is the Wall Street Journal's personal tech columnist, Joanna Stern, and D.A. Davidson's Apple analyst, Tom Forte. Joanna, let's start with you. This delay seems so long. I wonder if it's going to end up discouraging people ultimately from buying these wearables because they seem out of reach.
I thought the same thing, and actually a couple weeks ago I went to go order these for my cousin for her bat mitzvah. She's very lucky. I bought these $250 earbuds for her, and they were back ordered for a month and a half about at that point. And I thought to myself, what else would I get her? I could get the cheaper AirPods, which probably would be the nice thing to do, right, for me, but the competition just isn't there where Apple is right now. So I can't really look at Google. I can't look at Microsoft. Both of them have earbuds coming out, or wireless earbuds coming out in the new year. I can't really look at Amazon. The quality isn't great. So people are going to continue to buy these AirPods, and they're going to wait for them.
Tom, based on these numbers, the delays, and everything else you're seeing, what's your outlook for Apple's wearables business next year?
So I guess I'm a little more optimistic on it, to the extent that when was the last time we were talking about Apple having a product that was sold out and on back order? I mean, it certainly has been a while that we've seen that kind of demand on the iPhone front. So what's really driven the stock this year is the company's ability to diversify away from its overdependence on the smartphone
And it is encouraging that they now have a product that's sold out once again. And I do think that as they continue to advance their efforts in wearable devices, including the watches, things of that nature, it'll continue to be an area of growth for Apple, which is good for the stock.
That's interesting. It reminds me of a debate over the weekend in the Times about the decade and the beginning of the Tim Cook era, and the argument that he's made nice incremental moves, but nothing as transformative as a phone or even an iPad under Jobs. Is that fair?
I think that's very fair. I think, look at the AirPods, right? They are tied to the iPhone. In fact, they're tied to Apple's biggest kind of controversial decision of the last decade, which was to cut the headphone jack off the iPhone. So this is very much a product that I totally agree. It's a positive sign for Apple, showing that they're actually can sell out of a product still. But again, let's not minimize it. This is very much tied to the main breadwinner, the iPhone.
Tom, worth pointing out that the stock is now up 80% this year. Which is really an astounding performance. Of course, a year ago at this time, like so much of the market, it was down sharply. What are your expectations for next year in terms of what's going to continue to drive Apple shares, if in fact they are up?
So the good news for Apple in 2020 is that we're going to be talking about next generation phones on the 5G network. Now, it remains to be seen to what extent on a global basis you'll see the network build out and ready for that phone. But I do think the good news for Apple heading into next year is not only do they have a lot of momentum in their non-iPhone business, but this actually could be a year of good iPhone sales on 5G.
What about the focus on their services business? What do you think we'll see in terms of growth there? And how do you expect them to tie the most recently launched Apple TV Plus in with news and everything else?
From a services standpoint, I think that it does help that they have such a large installed base of their hardware, especially the smartphones. And I do think they face a little bit of a challenge there, to the extent that for most of 2019, we were looking forward to Apple TV Plus. Now it's out and up and running. Some people forget that the first show from Netflix was not House of Cards, it was Lilyhammer. So I do think that even if the morning show isn't a huge hit for Apple, it gives them something to build off of. So I think they have a strong base in services, and I look for them to expand that in 2020.
How big do you think the market is for these AirPods and for all of these new products? I mean, there was so much concern when the watch came out that it was too expensive. They've come out with various iterations of lower priced watches. When you look at this next generation of devices, do you think we're going to see the same kind of pace of innovation that we saw with the iPhone and the iPad and all of that?
I think it's tough on the AirPods. I think that we're going to hit saturation at some point. We all have these. And then what is the reason to get another pair? Well, one reason to get another pair is they're actually sort of built-in with built-in obsolescence, that they stop working, the batteries stop working, and people seem to have to replace them every 2 years or so. So that's one thing that's going for Apple. But really, what is the great thing that can come next to headphones? Maybe it's a little bit improved AI, better Siri, can help us with more prompts. But I really think looking forward, we're looking at other wearables in this area. Apple really improving. I think this next year, the watch, I think this is another year for a big leap in the watch. We didn't have that last year. I think we'll have that this year. I don't think we'll hear this year, but I think in the next couple of years about those glasses. What is that wearable for the future?
I went to the Oculus, the Apple store and the Oculus yesterday. They were getting in a shipment of the AirPods, of the new ones. So they are coming to stores.
They're coming.
I'm sure they sold them out in minutes. I didn't wait around, but they were coming that day.
Yeah, I mean, maybe there'll be lines. Maybe one day there'll be lines for AirPods.
Thanks so much for joining us, Joanna and Tom. Appreciate it.
Thank you.
Happy holidays. Merry Christmas.
Holidays.
Despite struggles from Uber, Lyft, and the controversial WeWork IPO that never happened, IPOs are still outperforming this year. Our Kate Rooney joins us with some more on that this morning. Hi, Kate.
Hey, Carl. So it turns out the struggles of those mega IPOs are not a great indicator of overall performance. IPOs as a whole did pretty well this year. The Renaissance IPO index has outperformed the S&P in what's looking to be a historic year for stocks. The IPO index, which is a basket of newly public companies, saw a 33% gain versus a roughly 29% gain for the S&P. Biotech and medical device companies were big winners. Analysts say that's thanks to the FDA approving drugs faster than investors had expected. Karuna Therapeutics topped this year's list with a 380% gain, and Beyond Meat was the big consumer winner with a 200% rally. And now to the list of losers, the worst performers were mostly small cap names, but Uber and Lyft, as well as Smile Direct, are some of the biggest underperformers when you account for market cap. The ride-hailing giants are down about 30% since listing. Tech names were towards the top of the list for the 5th year straight, and Kathy Smith of Renaissance telling me the broader IPO resilience shows there's still an appetite for high growth companies, just not those big money losing names without a clear path to profitability. And we can't talk about IPOs this year without mentioning WeWork, like you said, became the poster child for private valuations not always translating to public markets. And that's sure to be top of mind for a list of companies that could go public this year. Airbnb, DoorDash, and Credit Karma are all expected to tap public markets in 2020, guys.
We'll be looking for them. Kate, thank you.
Thanks, guys.
Let's get over to Rick Santelli now to see what he's watching. Rick.
You know, David, we had really quite a spectacular 5-year note auction on a half day with low volume, but something happened after that, and that's what we're going to talk about right after the break.
There's a lot of talk about value out there, but
As we play out the 2010s, TuneIn's looking back at the music trends that defined the decade.
Don't believe me, just watch.
The 2010s saw the rise of the viral hit when meme-ready tracks like Gangnam Style,
Oppan Gangnam Style,
The Harlem Shake,
Do the Harlem Shake,
What Does the Fox Say?
What Does the Fox Say?
And of course, Old Town Road snowballed from internet oddities to global phenomenons.
I got the horses in the bag. Horse stock is attached.
Keep listening to TuneIn for more trends of the 2010s.
Hey, NFL fan, can't watch the game? Can't be there? We got you covered. With TuneIn Premium, you can listen to every NFL game live as it's happening.
LaShawn McCoy has an opening on the right side, punches into the end zone for the touchdown.
Or catch it later on demand.
Offset backs behind Mahomes. The give is to Williams. Starts right, cuts it back to the left, and blows into the end zone for the touchdown.
You call the plays. Follow the NFL anytime, anywhere, all season long with TuneIn Premium. Upgrade today.
When you're not listening to your team, take it to the end zone, the rim, or the net. Keep up with the biggest moments in sports by following TuneIn on social media.
Block, Cook into the end zone for the touchdown.
From reminders of the live top games to tips of the best sports stations and podcasts.
Welcome to Undisputed. We are live from Los Angeles. I'm Jenny Taft here with Skip Bayless.
Follow and TuneIn on Facebook, Twitter, and Instagram to get the most out of TuneIn.
Hi, I'm Tom Haberstroh, host of the Haberstroh podcast. I'm partnering with TuneIn to answer a few questions and get you prepped for NBA Christmas Day. My favorite NBA Christmas memory is, I got to go with 2010 Heat Lakers. First year of the LeBron in Miami, going to the Staples Center against Kobe and the defending champion Lakers. Everything said the Lakers were going to win that game, but LeBron had a triple-double and blew out the Lakers. Search The Haber Show to listen to new episodes every Friday throughout the NBA season on TuneIn.
With 2020 on the horizon, TuneIn continues looking back at the stories that shaped the 2010s.
In 2010, the passing of the Affordable Care Act brings Obamacare to millions of uninsured Americans. In 2015, a ruling by Supreme Court legalizes same-sex marriage across the country. And in 2018, millions of students skip school to protest for stronger gun control in the March for Our Lives.
Search news on TuneIn to be listening when the next decade's big headlines break.
Let's get over to the CME Group and Rick Santelli for the Santelli Exchange. Hey, Rick.
Hi, Carl. I'll tell you, today was a very interesting day, and I once again stress, whether you're listening on your radio or you're watching, of course, on your TV or your computer, shortened sessions, thin markets, strange things can happen. Expect the unexpected. I remember a Christmas Eve about 30 years ago in the Japanese yen pit, hit up and down limit twice. Things can get wild. So today, of course, here's 5 sessions of 10-year note yields. We all know that we have been trying to get through this mid-190s, but we haven't been able to. So after the auction today, and it was a great 5-year note auction, it doesn't matter how many people showed up. They were very aggressive. But once the auction was done, here's what happened. we ended up losing everything, coming right back down to the support level right around 190. And the reason I think this is so significant is really the flavor of the pit today. I really thought maybe the thinness would lead to more selling, or at least the selling pressure to emerge. But do remember, whether it's Thursday, Friday, or all of next week, this will come into play. Now, here's 10-year notes, and of course, here's what I'm talking about with the 195 level. And, you know, we can have some support coming right through this way on the wedge. But just because we break through to the upside on a thin market doesn't mean we're going to keep going up, or it's going to be a big signal for 2020. Because at the end of the ordeal, if you were to tag this on another 20 years worth of 10-year note yields, we are still kind of surfing right on the surface of the water. Julia, back to you. Happy holidays.
Rick.
Merry Christmas.
Rick, happy holidays to you as well. Coming up next, the age of antitrust. We'll break down the new wave of mounting pressure against big tech and what's in store for 2020. Squawk Alley's back after this. Don't go away.
She wanted to move someplace warm.
How's work? If you're not loving your job and you're getting those Sunday blues, now's the time to make a change. With a LinkedIn app, it's now easier to find and land the job meant for you. There are millions of jobs on offer, and the LinkedIn app helps you hear about them first. Research shows applying within the first 10 minutes increases your chances of hearing back by up to 4 times. Stay in the know and grow your career. Download the free LinkedIn app today.
Ho, ho, ho. Who's made a list this year?
I want a new phone, one with amazing cameras, ultra-wide lens, of course, live focus video. Well, it has to be 5G ready to stream all my films. Can it come with something awesome to listen to them through?
Darling, I think he was talking to the kids.
Get everything you want and more. Purchase a Samsung 5G ready device and claim a pair of silver wireless Galaxy Buds at no extra cost. Shop our 5G handsets in store or online at your local O2 store or o2.co.uk. 18 plus. Offer excludes Galaxy Fold 5G. Purchased by the 25th of the 12/19. Claim from Samsung within 30 days. T's and C's apply.
Far wing, elevates, triple bucket.
The roar of the crowd. The shot clock ticks down. Will the ball go in? The suspense is pure torture, but you wouldn't miss this for the world. And the replays just don't cut it.
To the sideline, the man fleet for 3.
TuneIn Premium brings you every minute of the NBA season streaming live, so you can be there when it matters most. Hear it now. Hear it live on TuneIn.
Fake in the lane, turnaround jumper from 8 feet is good on the right.
Search NBA today to start listening.
When you're not listening to your team, take it to the end zone, the rim, or the net. Keep up with the biggest moments in sports by following TuneIn on social media.
Block, Cook into the end zone for the touchdown.
From reminders of the live top games to tips of the best sports stations and podcasts.
Welcome. Undisputed, we are live from Los Angeles. I'm Jenny Taft here with Skip Bayless.
Follow and tune in on Facebook, Twitter, and Instagram to get the most out of TuneIn.
Hey, NFL fan, can't watch the game? Can't be there? No biggie. With your TuneIn Premium membership, you already have an all-access pass to every team and every game in the league. Amazing, right?
Steps up, floats it towards, at the goal line, it's intercepted.
Listen live as the action unfolds or on demand when you can. Anytime, anywhere, all season long.
Right side, it is caught. It is in for the right side for the touchdown.
Search NFL today.
Mounting pressure from Capitol Hill on antitrust concerns, not to mention a lot of states. So how does this time period compare to past investigations and policies? Our next guest's article, How is Antitrust Enforcement Changing?, appeared in the New York Times this week. Steve Lohr, who covers technology, business, and economics for the Times and has done so for a long time, joins us. Nice to see you.
Thank you.
I mentioned you've done it for a long time because you do feel as though we're moving into a different period than one that you've been accustomed to. Why is that?
Yeah, I think the most recent period would have been the Microsoft case, a more purely economic case than we're facing now. The real analogy was probably the old progressive area of the late 19th century and early 20th century, and you have some of the same ingredients. Wealth concentration considerably, and so they don't call it the new Gilded Age for nothing. and you have market concentration in a number of industries, but big tech is the magnified example of that.
Yeah, I mean, nobody can argue on the power of these platforms, I would say. But at the same time, even if you want to argue they're monopolies, it's not clear the consumer is being harmed, at least from a price perspective.
Right. I mean, in the last 20 or 30 years, the dominant theme has been consumer welfare, and the principal, though not the only signal, has been price increases. So now kind of the real question is, are we entering an age when data, how you collect it, how you use it, is the principal signal rather than higher prices?
Now, it's interesting because with Facebook facing so much scrutiny and potential threat, perhaps, of being broken up, they're arguing that integrating all of these different services that they own, having end-to-end encryption and making it seamless to go between WhatsApp and Messenger and Facebook will actually benefit the consumer in terms of protecting their data. Do you think Facebook's going to end up getting broken up?
Two different points. There's a long way between then and now. The theory on the Facebook breakup, which was led by two prominent, really, antitrust scholars, Tim Wu at Columbia and Scott Hempel at NYU, is that around 2000, the story is that around 2011, 2012, Facebook saw that it was lagging in things like mobile and messaging, and so they acquired first Instagram, the photo sharing app, and then WhatsApp, the messaging service, as part of a campaign to buy up nascent competitors. And that has not been the standard that has been used so far in antitrust, but there are a lot of people looking at that are also not, hardcore progressives. When I talked recently to Doug Collins, who is a Republican from Georgia and was the kind of the most prominently was this rabid guy in the Judiciary Committee. He's the ranking Republican in the Judiciary.
Everybody knows him now
for the impeachment. Yeah. And talking to him, he thinks this buying up of nascent competitors is something that should be taken a look at, and your control of data. So it isn't. You don't have to be part of the the Bernie Sanders, Elizabeth Warren wing of the Democratic Party to be doing this. And the guy who's leading the state's investigation of Google is Ken Paxton in Texas, who is a Tea Party Republican. So this isn't, it would be a long, to answer your question, it would be a long way to break it up because it would be challenged in court, and the courts have tended to be conservative.
I wonder what you make. Washington Post did a piece this week arguing that broadly, maybe not in tech specifically, but with Disney, Fox, CVS, Aetna, T-Mo, Sprint, the DOJ has actually been arguing in favor of big companies, which sort of runs counter to some narratives.
Yeah, and I think some of those they look at differently than this one. I mean, Arkan Del Rahim, who's the head of the Antitrust Division of the Justice Department, has been, pretty forthright and outspoken about saying that these guys should be investigated. This is the right thing to do. No service is free. Data can be abused as an asset. I mean, so there are different contexts in different things. I think if in a lot of these cases, if you have, you bring it down to 2 or 3 as opposed to 4 or 5 in a market, they're okay with that. In looking at some of the markets that these guys, the big tech companies, dominate, you don't get that high numbers. These are powerful platforms that really kind of control their worlds.
Indeed, they do. We'll be watching them closely as the new year dawns as well. Steve, thank you.
Thank you.
Steve Lohr from the New York Times.
Closing bell is a little over an hour away on this shortened session. Dow's down 34.
Tomorrow is just waiting to be.
Ho, ho, ho. Who's made a list this year?
I want a new phone, one with amazing cameras, ultra-wide lens, of course, live focus video. Well, it has to be 5G ready to stream all my films. Can it come with something awesome to listen to them through?
Darling, I think he was talking to the kids.
Get everything you want and more. Purchase a Samsung 5G ready device and claim a pair of silver wireless Galaxy Buds at no extra cost. Shop our 5G handsets in store or online at your local O2 store or o2.co.uk. 18 plus. Offer excludes Galaxy Fold 5G. Purchased by the 25th of the 12th 19. Claim from Samsung within 30 days. T's and C's apply.
Hello, I'm Nat Coombs from ESPN's The Nat Coombs Show, which admittedly is 1 out of 10 for original podcast name, but 10 out of 10 for NFL chat. Every week, we're dropping 4 episodes with an all-pro lineup of terrific guests, journalists, comedians, players, coaches, you name it, all getting you up to speed with everything gridiron. The Nat Coombs Show, American football, British accent. Add to your favorites and listen on TuneIn.
Cutting for the net, scores! On the goal line, Marshawn scores!
Hockey fans, the 2019-20 NHL season is here.
And tucks it home!
And with this team, it's really fun to be a part of a team like that.
And you can hear the action live on TuneIn Premium. From regular season action to the All-Star Game and through the Stanley Cup in June. Hear the home and away call for every game, for every team live. At home or on the go, never miss a game with the NHL on TuneIn Premium.
Upgrade today.
Spend Christmas Day listening to the NBA on TuneIn Premium. Featuring 5 big matchups on the holiday schedule. Unwrap the action starting at 12 Eastern when the Celtics take on the Raptors in Toronto, followed by the Bucks and the 76ers at 2:30. The holiday cheers continue with the Rockets and Warriors at 5 and the Clippers and Lakers at 8. And a showdown between the Pelicans and Nuggets at 10:30. 'Tis the season with the NBA on TuneIn Premium. Upgrade today.
You might already know that TuneIn allows you to listen to all the pro sports leagues wherever you go. But did you know TuneIn is also home to the wide world of college sports?
Open 3, DeAndre Hunter got it! Handoff Carruthers, big hole right side. He leaps and he surges in, touchdown!
From live college football, basketball, and baseball games to podcasts and coaches shows fueling your love for the game in your school. And the best part is, it's all free. Search college sports to find your team or league.
Tesla first close above 420. If this holds here at 421 and change, up a couple of bucks after it got to 420 intraday yesterday for the first time. We mentioned earlier the note out of Morgan Stanley today, Adam Jonas, saying that we're not bullish on Tesla longer term. They do keep their equal weight and a price target at 250. Jonas was on with us the other day and said it's really leverage that keeps them from being more aggressive on this name.
Now, Elon Musk tweeted about that 420 number yesterday, but I don't know if he's tweeted again today. Always waiting to hear from Musk.
It's been straight up since that last quarter when they were more profitable than certainly had been anticipated. It's going to be interesting to watch. I wouldn't mind getting one for Christmas.
You want one of the trucks?
How about, no, I don't want the truck. I just take the 3, I guess.
It will be very interesting to see how that truck does.
Yeah, it will indeed.
Let us know on Thursday if that works out.
Yeah, I don't think it's happening.
I would just glad you're staying here with the network.
I'm here. Yeah. I'm here. I'm not going anywhere. Thanks, Carl.
Merry Christmas, everyone. Happy holidays. Let's get to the closing bell back at Post 9.
And welcome to the Closing Bell. I'm Scott Wapner in today for Wilfred Frost on this shortened holiday trading session here at the New York Stock Exchange. Market closes at 1 p.m. Eastern, and we'll be with you through 2 p.m. We'll see if we can set some new records in this final hour of trading.
That is right. I'm Seema Modi, everyone, in for Sarah Eisen. Let's look at what's driving the action. Any close higher for the Dow, S&P, or NASDAQ would be a record, with the NASDAQ looking for its 10th positive session in a row. President Trump says he will ultimately have a trade deal signing ceremony with China's Xi Jinping, though he says a quicker signing will happen first. And the real estate sector is leading the charge today while industrials lag.
Joining us for the hour today is Barbara Duran from BD8 Capital Partners. What a year it's been, and we're on this run. We'll see how far the momentum can take us. What do you think?
Well, it's interesting. If you look back a year, the market was, at a 14.5 PE, and now we're at an 18 PE. I think the market can continue. I think you've had positive feedback on what's happening in China. I think the bottom's put in there. And I think with the Fed easing 3 times, and we expected them to raise, and global easing among central banks around the world, you've got great support for next year. And the valuation, if you just X out the 5 top stocks in the S&P 500, it's 16.5. And with interest rates this low, I think we have more to go.
Yeah, we'll see what earnings do in the new year, and that ultimately may be the tell on where stocks go from here.
Yeah. Let's focus in on the big stories we're watching today. Bob Pisani is here at the exchange with a look at the biggest movers. Bertha Coombs up at the NASDAQ, which is trying for its 10th straight day in the green. And CNBC.com's Leslie Josephs is covering Boeing and the challenges still facing the company following the firing of CEO Dennis Muilenburg. Let's kick it off with Bob here at the exchange. Hello, Bob.
And Seema, it's a kind of a flat day, but we've had a tremendous move up. The advance decline line at new highs, so the market advance has been tremendous this year. More stocks advancing than declining, and that's a big help to overall market sentiment. You just don't want a few stocks moving up. Today we had retail, another good day. A lot of the retailers are up. Rite Aid's been on fire the last week or so. It's doubled in a week. Earnings were terrific about a week ago. It was $8 a week ago. Now it's $16. Gold stocks, a little bit of move the last couple of days. Gold's about a 6-week high. It hasn't been a huge performer this year, except in a few moments of uncertainty. Some of the big names like Harmony, Goldfields, all up today. Finally, on Uber here, we see Travis Kalanick resigning from the company's board of directors. That's effective at the end of this year to focus on new business and philanthropic endeavors. And of course, Uber, one of the more disappointing IPOs of the year. Guys, back to you.
All right, Bob. Thank you. That's Bob Pisani. NASDAQ is looking to close out the day with its 10th straight gain, and Bertha Coombs has a check on the movers up there. Hey, Bertha.
Hey, Scott. Apple has been the core of the NASDAQ's record run this year and at a fresh all-time high again today. So far this quarter, it's added more to the NASDAQ 100's gains than the next two stocks, Microsoft and Tesla, combined, and more than the other four stocks in FANG combined. The stock of the year, though, is AMD, more than doubling as tariff fears have faded and chips have come roaring back right along with Apple. Today, we're seeing relative strength, though, in biotech and small caps, which have seen the biggest comebacks in terms of investor sentiment this year. Biotech's, in fact, gaining all of their gains for the most part just this quarter. And that's helping non-tech outperform today, with more than 115 million Americans set to travel by planes, trains, and automobiles this holiday. The newest addition to the NASDAQ 100, car auction site Copart, is leading that group. Seema?
Bertha, thank you. The Dow right now at session lows. We're keeping an eye on Boeing shares following the firing of embattled CEO Dennis Muilenburg in the wake of the company's 737 MAX crisis. Let's bring in CNBC.com's Leslie Joseph. Leslie, welcome. Beyond returning the 737 MAX to service next year, what's the biggest challenge for the new CEO, David Kell?
Well, he certainly has his hands full beyond the MAX. Number one is really repairing the company's relationship with the FAA, with customers. You don't want an all-Boeing airline like Southwest or even other big customers coming to look over at Airbus. They also have other problems with slowing orders of wide-body jetliners. They've already decided to cut production this year. That's a big problem. And, of course, there's the China trade question. What is going to happen with that, which has been a really big customer of Boeing's as we go along. And important to remember, China was the first country to ground the 737 MAX back in March.
Barbara, how should you view, as an investor, Boeing? Change of management, but not change of story.
Well, I own Boeing, and I have that on weakness. And I think that, the last CEO, Muilenburg, was very good up to this point. And he is not a people person. And so this crisis has been mismanaged from the start, where they didn't decide to ground the planes right away. That was like, let's get our facts information in, when he just needed to take action, a la Tylenol many years ago. And so I think with the, with Calhoun coming in, it's going to be a real positive, because he's already made the calls, and it's going to smooth the way. And just, investors already expect delays. And it's a duopoly, as you said, and it's real. You can't go elsewhere. And Boeing has a great reputation, and they'll sort this out.
You're hanging on to your shares, and you've done so the whole time, haven't sold anything.
Yeah, and I think, no, I haven't. I put the bottom has been put in, but I think it's going to be a while. Obviously, cash flow is going to be hit this year. We don't know the magnitude, but it's going to be a lot. Even where they had to stop making planes, the inventory is 400 planes, and those planes are sitting there, no doubt. Weather's affecting them, all this stuff. So they got a lot of wood to chop, but they will. It's just going to be a much longer time frame than investors were led to believe.
And Leslie, I imagine beyond the 737, Calhoun also has to work on improving morale for the thousands of employees,
This is
not just in Seattle and in Renton, Washington, but around the world.
Around the world, and also airline employees. I mean, Southwest pilots have sued Boeing, saying that we've missed out on all of this overtime because this happened. So Boeing needs pretty much everyone on board so that this plane can gain the confidence of the flying public once it does return.
All right, Les, thanks. All right. And you can catch Leslie's latest article, by the way, on Boeing on CNBC.com. Meantime, Uber co-founder and former CEO Travis Kalanick is stepping down from the company's board of directors effective December 31st. That move comes on the heels of Kalanick selling his entire stake in Uber following the company's lockup expiration in November. For more, let's bring in Yigal Arunian. He is from Wedbush Securities, joins us now by phone. Yigal, welcome. It's nice to talk to you today. This is no big surprise, is it?
Thanks for having me, guys. No, it's not a big surprise at all. I mean, Trevor's been pretty much systematically selling his entire ownership in Uber. I think you could have seen this coming, even from the early days of him kind of selling his shares, but especially as he pretty much exited his entire stake. I think the writing was on the wall.
Is there any bigger statement in it, though, about what he thinks about Uber's prospects over the longer term if he's getting out completely?
There could be. It's hard to speculate. Maybe he feels that the long-term prospects aren't there. Maybe he just feels that the company not being under his leadership doesn't have long-term prospects. I mean, he founded this company. He basically created an industry. I would think that he would still have the faith that the industry has a lot of potential, and there's a lot of room for it to grow overall. Maybe he felt that under current leadership, Uber wasn't headed in the right direction. But you can't fully blame him for feeling that. It's a company he founded, and he was on the board, but it was being led by others. I could kind of see how he could feel that way.
Barbara, what do you make of the stock? You've been watching Uber. It's down about 35% since going public. Travis stepping down, perhaps not a surprise, but it's certainly not a vote of confidence.
Well, I know. I think on Travis stepping down, it is a surprise. Not only step down, but to sell, most of his shares. Because you think, like as the gentleman just said, is it because it's a lack of confidence, or who knows? I think we can't speculate about it. Uber, I'm not ready to buy yet, because even though I think there's rationalization in the competitive arena, it looks like in the end it'll be Lyft and Uber. It's still, and they've been going at it for 7 years. So it's hard to know, who's going to be the last man standing. But
Yigal, why do you have an outperform on the stock? You have a lofty price target, too. I mean, this thing's been a disaster.
Yeah, it's been tough going out of the gate. It's been a tough year for both Lyft and Uber. Investor sentiment's been really negative. But look, this is a really large global market. There are a lot of things that maybe will take some time to play out. I think it's pretty clear that it's Uber and Lyft in the domestic market. I don't think any other player can really come in. You'll probably see a duopoly between those two over time. You've seen competitive pressures start to abate in the U.S. That's leading to better profitability. Ultimately, competition is the biggest piece or the biggest missing piece to get to a path to profitability. That will come over time. Uber is in a dominant position in pretty much every market on a global basis. Maybe it'll take longer than investors thought. When this company first went public, but they've set that target for 2021. And as long as they can outlast competition and do a better job than their smaller competitors, they should hang around there. And then you've got a pretty massive global market, and I think that's something investors can buy into.
So Yigal, bottom line, when do you expect Uber to become profitable? Because that, of course, has been a big concern for investors.
Yeah, look, so I think that's a harder question to answer for Uber. I think it's a little bit easier to answer for Lyft because they're domestic and rideshare only. And I know they set that 2021 target, so that's our bogey right now. For Uber, I think ultimately it will come down to is how the competitive pressures in the food delivery market start to ease up, and if they do, they haven't at all. You saw them exiting, or there's press reports of them looking to exit India and food delivery, and it's about them rationalizing in markets where they can't get that competitive edge and pushing in markets where they can, and that's what will get them to be profitable in 2021 if they could do that.
Yigal, appreciate it. Enjoy the holidays. We'll talk to you soon. Yigal Arunian joining us there on Uber. All right, after the break, stocks looking to close out this shortened holiday session near record levels, but it was a very different story this time last year. I was sitting here. It was definitely different. We'll take a look at the December scare of 2018 and what's changed since then.
And later, Citi's chief U.S. equity strategist joins us to discuss his outlook for 2020 and the biggest potential risk he sees to the market next year.
Most people think of Verizon.
As we wave goodbye to the 2010s, TuneIn is remembering some of the decade's biggest news stories.
In 2011, the Arab Spring sparks anti-government protests across the Middle East and Northern Africa. In 2016, the United Kingdom votes to leave the European Union, forcing the ongoing Brexit crisis. And in 2019, Hong Kong erupts in 6 months of pro-democracy protest against mainland China.
Search news on TuneIn to be there when the next big story breaks.
Want to hear about the latest and greatest things to listen to on TuneIn? For reminders of the biggest live sports games, debates, and breaking news stories, follow @TuneIn on Facebook, Twitter, and Instagram to stay connected with the audio that matters to you.
What was your favorite podcast of 2019? Well, here's ours.
This is the Open Ears Project, a new daily podcast in which people tell us a story about the piece of classical music that means the most to them.
Part mixtape, part sonic love letter. The Open Ears Project is where people share a classical track that gives a glimpse into their lives and allows us to hear the music and each other differently.
Brought to life things that I couldn't really put into words.
Search Open Ears Project on TuneIn to check it out.
You might already know that TuneIn allows you to listen to all the pro sports leagues wherever you go. But did you know TuneIn is also home to the wide world of college sports?
Open three, DeAndre Hunter got it! Handoff Carruthers, big hole right side. He leaps and he surges in, touchdown!
From live college football, basketball, and baseball games to podcasts and coaches shows fueling your love for the game in your school. And the best part is, it's all free. Search college sports to find your team or league.
Introducing a new podcast, ESPN Daily. When you want to go beyond your feed, when you want to get inside the score, when you want to get behind the highlight, there's ESPN Daily. Go deeper into the stories of the moment. Get the exclusive access and insider perspective that only ESPN can give you. ESPN Daily, hosted by me, Mina Kimes. Listen now to ESPN Daily on TuneIn.
Start hearing more of what you want. Upgrade to TuneIn Premium and get over 45 commercial-free music stations, live commercial-free news, and every live NFL, MLB, NBA, and NHL game. Visit TuneIn.com/premium to upgrade.
Stocks are on pace to close out this Christmas Eve near record highs, but it was a very different story last year as the market was hit with a barrage of bad news. Here's a look back at last Christmas Eve on Closing Bell.
No Christmas cheer, though, today. Stocks selling off in this final hour of trade.
You've got a government shutdown, and all of that coming after the Federal Reserve reduced interest rates.
The headlines that we got out of Washington has put a significant amount of pressure on our markets, and it doesn't seem like there's an end in sight anytime soon.
Month to date, we are down 14%, pretty much for all three of those indices. Extraordinary decline.
Which makes it the worst December, of course, since the Great Depression. As I'm just looking here, session lows with minutes to go before the close. The Dow is down 600 points.
With just over 2 minutes left to trade, S&P 500 intraday chart for you tells the whole story.
Worst in history for Christmas Eve close for the markets.
A historic day to say the least. Let's dive deeper into the big differences between this year and last. Joining us now from the Telestrator, Paul Hickey, co-founder of Bespoke Investment Group. Paul, what are the charts showing you?
So, big difference between this year and last year. Last year at this time on Christmas Eve, close to 50% of the stocks in the S&P 500 all hit a 52-week low on the same day on Christmas Eve. Really washout. We haven't seen a reading that weak, going back to almost this financial crisis. So we talk about how things are a lot different this year versus last year, but right now we have about just 15% of stocks hitting new highs. So we're not at we're nowhere near the extreme positive as we were to the negative of last year. So that's one thing. Now turning to valuations, this is a big difference from last year. So at the lows last year, the S&P's PE ratio was about 15 times earnings there. So 15. We've gone up to, we're over 20 times earnings now, which is not cheap by any stretch of the imagination. But behind my back, we saw in 2000, we saw valuations go much higher here and much higher here. preferably, you don't like to buy stocks when they're expensive. Everybody knows that. But as far as a timing signal is concerned, valuations are probably the worst timing tool you can have. So turning to the next slide here, what we're just showing is we're showing the S&P 500 PE ratio on the x-axis. Y-axis shows the next year's forward returns. So if you see high valuations here, you would expect, if you had high valuations, you would expect to see low returns going forward, but we don't necessarily see that here. And if you draw the correlation between the two, it's very low correlation. They're not positively correlated or negatively correlated. There's basically no correlation. And another way to show this is if this is the current PE right here, if we look at the 10 times where the S&P 500, that's a rough estimate, has had the closest PE ratio, the 5 years ahead versus the 5 years below, the next year, the S&P 500 is positive every time. So when we've had valuations at similar levels, stocks have actually gone up going forward. Not saying this is a reason to buy stocks because they're expensive, but just you shouldn't necessarily use this as a timing signal and say stocks are expensive, therefore I need to sell.
But for how long do they go up typically?
Well, so this is the next year's return. So the average return of the S&P was about 18% in the year following those 10 years where we had the most similar PE. But so the key is, at some point valuations are an issue, but what we like to say is they're fuel for a sell-off or a rally, but they're not the catalyst or they're not the ignition. You need something else to get that, combustion going.
The whole reason we're even having this conversation, whether stocks are too expensive or not, relative to earnings, is because there basically were no earnings. Earnings growth was up, 0.5%.
Right.
So the question is, where are they going to be in 2020? And can a market survive on multiple expansion alone, or do you need the foundation of earnings to support the market going higher?
Right. No, I think you're exactly right. We need to see some sort of earnings growth because this year we got multiple expansion. In the last 2 years, we've basically seen valuations stay still. On the earlier slide I showed earlier, valuations were higher 2 years ago than they are now. But the key is, where are we going to find earnings? You may not see it in tech, but we can see a pickup in energy if energy prices stay stable. Oil prices are actually up versus last year, even though the energy sector's been so weak. And in the industrials, if we are to see this global stability and an easing of trade tensions, the industrials should see some better numbers going forward.
We actually have Jim Cramer, Mad Money host. He wants in on this conversation. Happy holidays, Jim. I don't know what you're doing today, but
I'll tell you what I'm doing.
What do you want to add to this conversation?
I'm watching your show. Hello, Barbara Duran. Good holidays to you.
Hey, Jim. Happy holidays to you.
Okay, I think this discussion is great because what I really see is a secular growth theme that is taking over, one of many, but technology is being buoyed by 5G. And this secular move transcends anything. And it is not multiple expansion. We see that. And the other thing that transcends anything is the fact that, I need some yield. So I need to go into the Pepsi and Procter & Gamble world. So these are great themes, needing income and 5G. And that's what I love about this market.
No, and I would say, that's a great point. I mean, when you have long-term treasuries still below 2%, yielding about the same as the S&P 500, who would want to hold a 10-year treasury when they can hold in the stock market for 2 years and make the same return going forward?
Yeah, and I've been at this mine. I mean, I cannot believe how many years I've been at this mine. And this show shows me exactly what we're talking about for last year. I remember last year, Scott, we had Dunlop on, whom I totally revere. And the fact is that with Dunlop, I think what was changed is that we had a Federal Reserve chairman who thought the economy was too strong. He was a rookie Fed chairman. Now he has adopted the Yellen view. And to me, it says we're sailing.
Well, to that point, if you would say, okay, you look back a year ago today, and the market's falling on its face, what's changed? The biggest thing that's changed, Jim, is that you had a hostile Fed into a friendly Fed. And you've had that for the duration of the year now, and it's no shock that in that environment, stocks would be up.
And what did Marty's Live teach us, the late Marty's Live? Don't fight the tape and don't fight the Fed. We have the tape going for us. Barbara Duran, I need you in on know what it's like to have a friendly Fed and a friendly tape. It is a miracle we have it so rarely. It's what makes this market go high.
Jim, I think you're absolutely right. I think the Fed is, we know we have a lagged effect on interest rate cuts, and I think that's what the market's been anticipating. And there's been a big debate. Do you do cyclicals, industrials now? I think you could do a lot of different sections. I think you're right on the 5G. You've got AI. There's going to be so many companies starting up and so much going on still in the high-tech area. But you're right on the P&Gs because as there's global reflation, it's not just our Fed that's been cutting. You know, you're going to see a lot of the companies with big international sales do better. So I am with you 100%.
Jim, if the economy continues to strengthen, as we've seen over the past couple of months, I mean, it does beg the question, does the Fed stay accommodative, or at some point, does Jerome Powell have to raise rates?
I think that he has a president who is hostile and wants to keep raising tariffs if the Chinese don't play ball. And you very much need a Fed that is flexible. If Trump does things to make it so that the worldwide economy flows. So I think he's very conscious of the worldwide economy, and that makes me feel once again that he is on the side of the bull. It makes me very excited about what could happen.
Jim Cramer, Mad Money host, thank you so much for dialing in. Barb, last word.
No, I just want to say, and one question for Jim is that it seems to me the Fed would only raise if there was real hints of inflation. I mean, there's worry about asset bubbles, financial instability, but that's not going to be a reason they raise rates.
So good. Merry Christmas, Happy New Year. All right?
Happy holidays.
Good to hear from you.
You know, the other thing is, you know the Fed's not going to do anything early in the year, and then you get into the election cycle, and the Fed's going to be reticent to do anything as you get closer to the election. That's even more a positive, potential positive scenario for this conversation and the stimulus of the Fed.
Right. I mean, the way we looked at it, last year in our end of the year report, we had just had the December meeting, and we were talking about how the Fed was giving the middle finger to the market as far as performance is concerned. This year, the Fed is basically, we have your back, and we're, pretty much on vacation. They said that in October, and then in the last meeting, they really reiterated the fact that basically we're not doing anything unless inflation really gets persistent and significant. Well, we have neither of those right now. So at this point, it's going to be hard for them to do something right before the election. Yeah.
It's a good discussion. Paul, thanks for weighing in.
Thanks.
Still ahead, it's been a banner year for the banks with the sector up nearly 30%. After the break, we'll take a look at whether the rally can continue into 2020.
Plus, Tesla's record rally hasn't sold everyone on the stock. We'll tell you why one analyst says Tesla's true value could be much lower than its current price.
Tis the season to be hunched over your laptop. Not on our watch. In real life, you can fill your senses and your baskets. Feel all the sights, sounds, lols, and OMGs. Wear laughing emojis on actual smiley faces. Battery is running low. Take the kids to Santa's Grotto. In real life, you can find just the right present using the most advanced search engine in the world. Your eyes. We can't in real life. Brent Cross, London. Free parking for all sleighs and cars.
We can't make traffic move faster during rush hour. But we can help you catch up on the news with TuneIn. With live around-the-clock news from MSNBC.
In the UK, they're significantly worse. When the president gets up to the podium...
CNBC and Fox News Talk.
The Fox News poll sizing up the race for 2020 found that each of the 5 top Democrats...
You can use your stop and go for good by staying in touch with the world. Search news to hear what's happening now.
Hey, NFL fan, can't watch the game? Can't be there? We've got you covered. With TuneIn Premium, you can listen to every NFL game live as it's happening.
LaShawn McCoy has an opening on the right side, punches into the end zone for the touchdown.
Or catch it later on demand.
Offset backs behind Mahomes. The give is to Williams. Starts right, cuts it back to the left, and blows into the end zone for the touchdown.
You call the plays. Follow the NFL anytime, anywhere, all season long with TuneIn Premium. Upgrade today.
When you're not listening to your team, take it to the end zone, the rim, or the net. Keep up with the biggest moments in sports by following TuneIn on social media.
Block, Cook into the end zone for the touchdown.
From reminders of the live top games to tips of the best sports stations and podcasts.
Welcome to Undisputed. We are live from Los Angeles. I'm Jenny Taft here with Skip Bayless.
Follow at TuneIn on Facebook, Twitter, and Instagram to get the most out of TuneIn.
As we play out the 2010s, TuneIn's looking back at the music trends that defined the decade.
Don't believe me, just watch.
The 2010s saw the rise of the viral hit when meme-ready tracks like Gangnam Style,
Oppan Gangnam Style,
The Harlem Shake,
Do the Harlem Shake,
What Does the Fox Say?
What Does the Fox Say?
And of course, Old Town Road snowballed from internet oddities to global phenomenons.
I got the horses in the bag. Horse stock is attacked.
Keep listening to TuneIn for more trends of the 2010s.
Street, let the Christmas spirit ring. Later we'll have some pumpkin pie and we'll do some caroling. You will get a sentimental feeling when you hear.
34 minutes left in today's shortened trading day. Financials, one of the best performers this year, up nearly 30%. And our Wilfred Frost has a look at what to expect next year from the banks.
It's been a bumpy year for financials in 2019, so here are the key things to watch for in 2020. First, interest rates. Bank stocks are always linked to the yield curve because of its direct impact on net interest income. This has been particularly the case in the second half of 2019, as it's likely to be next year, as investor fears over where we are in the cycle continue to rise. Second, regulation. After a decade of ever-increasing costs and restrictions, banks have enjoyed 3 years of easing regulation. The 2020 presidential race will have a huge impact on the direction from here. And as President Trump's administration has shown, quite a lot of regulatory change can be made without congressional approval. Third, tech and automation. Tech has led to new challenges and challengers for the big banks. Despite that, the big players continue to get bigger, even if their margins are pressured in the process. And more mergers could arise, as we've seen with Truist and Charles Schwab.
A rough ride for financials, Barbara, but some of them actually came out ahead.
JP Morgan is the class act in this group.
Your top pick in this space.
Yes.
Why is that?
Well, because they've got such a broad business. They have depth in their management, and they are a beneficiary of all the trends that Wilfred just so accurately identified. I mean, I have preferred to play in the financial sector, the MasterCards and the Visas, because I prefer to have a secular wind at their backs, which they do, which is the switch from into electronic payments. So that's where my heaviest allocations are in those two names.
You think rates continue to go up into the new year?
No, it doesn't look like it. I think later, not into this year, but into next year, as things pick up, they could go up a little bit.
Into 2020.
Oh, I'm sorry.
I mean, yes. Because I was going to say, well, how are the financials then going to do well in 2020 if you don't think rates are going to go up at all?
Yeah, right.
Right? They're obviously so tied, as Wilfred so accurately said.
Exactly. No, I think near the end of the year, we'll see what happens in terms of business and as earnings come in. But I think the Fed is not going to be raising rates all that much, and I don't think they'll creep up.
U.S. versus European financials, we're out of negative territory. The German Bund now for the first time in 4 years. Does that perhaps get you excited about looking for opportunity in the financials overseas?
I think a lot of people are looking overseas in general, and particularly in the financial space, because as the world reflates, these are typically a group that will lead. So I think a lot of people are looking in Europe because a lot of the banks there have been cheap, and for good reason, but they could benefit even more than our banks, which have had a nice run into the end of this year.
Let's take a look at 3 things driving the action now. Any close higher for the Dow, S&P, and NASDAQ would be a record, with the NASDAQ looking for its 10th positive session in a row. President Trump says he'll have a trade deal signing ceremony with China's Xi Jinping at some point, though he says a quicker signing will happen first. And real estate stocks are leading today, while industrials lag.
Time now for a CNBC News update with Bill Griffith. Hello, Bill.
Hello, Seema. Here's what's happening at this hour. Hong Kong police fired rounds of tear gas at thousands of protesters as anti-government rallies escalated there into chaos on Christmas Eve. The protests in Hong Kong are now in their 7th month. Meanwhile, students took to the streets of New Delhi protesting against Prime Minister Modi's government and a recently introduced citizenship law. Authors, lawyers, and activists joined those students, all claiming that the act is discriminatory to Muslims. Grammy-nominated rapper DaBaby was detained in North Carolina hours after he gave away toys to children shortly after his concert. Police issued citations to the rapper, whose real name is Jonathan Kirk, for misdemeanor possession of marijuana. Afterwards, the rapper said the police were just trying to make him look bad in front of his daughter. And finally, the rumors are true. The Seattle Seahawks have signed running back Marshawn Lynch for the final game of the season into the postseason. Lynch was with the Seahawks back in 2010 to 2015, helped them reach 2 Super Bowls. No word on how much the deal is worth. And Scotty, I know you're into that. He hasn't played in 14 months, but he claims he is not rusty. And we will find out if he's still got the legs coming up for this final game of the season.
Beast mode is back. Maybe they'll actually give him the football if they get down to the 1 yard line next time. We'll see.
See if they learned anything.
I couldn't resist. All right, Bill, thank you.
See you later.
All right, coming up, we've got your last chance trade, and Barbara's picking an apparel stock that's up nearly 90% this year. We will reveal her call straight ahead.
And later, Recode's Kara Swisher joins us to discuss Travis Kalanick's exit from the board of directors at Uber, plus her key tech theme to watch in 2020. And as we head into break, here's a check on bonds. Yields on the benchmark 10-year yield ticking lower today, currently yielding just under 1.92%. Closing bell, special edition. We'll be right back.
The Bond Report. What was your favorite podcast of 2019? Well, here's ours.
This is the Open Ears Project, a new daily podcast in which people tell us a story about the piece of classical music that means the most to them.
Part mixtape, part sonic love letter. The Open Ears Project is where people share a classical track that gives a glimpse into their lives and allows us to hear the music and each other differently.
Brought to life things that I couldn't really put into words.
Search Open Ears Project on TuneIn to check it out.
Want to hear about the latest and greatest things to listen to on TuneIn? For reminders of the biggest live sports games, debates, and breaking news stories, follow @TuneIn on Facebook, Twitter, and Instagram to stay connected with the audio that matters to you.
The Better Network is now on TuneIn. This is Brent Musburger. Search the Better Network. That's the BETR Network. And then let us get you better prepared to better enjoy the day in sports. The NFL, college football, basketball, hockey, baseball. Sharpen your edge. The Better Network is now on TuneIn. Be better informed. Be better prepared. Search the Better Network. That's BETR.
Spend Christmas Day listening to the NBA on TuneIn Premium. Featuring 5 big matchups on the holiday schedule. Unwrap the action starting at 12 Eastern when the Celtics take on the Raptors in Toronto, followed by the Bucks and the 76ers at 2:30. The holiday cheers continue with the Rockets and Warriors at 5 and the Clippers and Lakers at 8. And a showdown between the Pelicans and Nuggets at 10:30. 'Tis the season with the NBA on TuneIn Premium. Upgrade today.
Whether you call yourself a Democrat, Republican, Independent, or something else, the road to 2020 is on TuneIn.
What a night!
And a complete earthquake. This was
Follow every step of the Democratic primaries while hearing the latest headlines from the White House with live 24-hour news from CNN, MSNBC, Fox News Talk, and more.
We're closing in on the first results in the battle for the White House.
Experience the election through the sources you trust with the nonstop news channels on TuneIn.
Hey, NFL fan, can't watch the game? Can't be there? No biggie. With your TuneIn Premium membership, you already have an all-access pass to every team and every game in the league. Amazing, right?
Steps up, floats it towards, at the goal line, it's intercepted!
Listen live as the action unfolds or on demand when you can. Anytime, anywhere, all season long.
Right side, it is caught. It is in for the right side for the touchdown to Keenan.
Search NFL today.
The 3 major averages rallying by 27% or more since last year's Christmas Eve sell-off, with the S&P 500 on pace for its best year since 2013. Can stocks keep up the momentum next year? Let's bring in Tobias Lefkovich. He is the chief U.S. equity strategist at Citi for his 2020 vision. Your vision's a little cloudy, it sounds like. You are only looking for modest gains in the year ahead.
If I take off my glasses, you see how thick my lenses
what are you having trouble? What are you having trouble seeing through
So look, I think there are four things that can drive the market. One of them actually happened this past year, which was sentiment was so poor entering the year, and everybody talking about multiple expansion. That was the sentiment factor that swung from an panic euphoria model, deep panic, into not even euphoric territory today, which is kind of interesting. The market may be at highs, but people aren't that ebullient. Number two would be money flows, but we really haven't seen that other than corporate buyback activity. We haven't seen that for 8 of the past 10 years, 5 of the past 5 years, despite the S&P's pretty much doubled in that 5-year period. Third thing would be if you were to get valuation really cheap, which you really don't have today. And the fourth one would be earnings. So you're really banking on earnings at this point. And we think earnings can be up about 5% or so. And that's what really carries you. Do you get an overshoot is the one question initially. And I think the first half you do. Economy's a bit better. People will feel better. Earnings will show up. And there'll be this kind of confidence returning. It's the second half that gets a little shakier.
So it's going to be a top-heavy 2020.
Our sense, it's, with all apologies to Dickens, it's a tale of two halves. That the first half is one that's a little bit more rewarding, and the second half you run into the elections, you run into data around lending standards getting tighter means a weaker second half. Volatility lead indicators, profit lead indicators, all those suggest something a little bit more challenging in the second half.
Is there any sector that could withstand the volatility or the uncertainty in the run-up to the 2020 election?
You'd like to think so, but it's again, I think it's going to be a little bit more cyclical, a little bit more value-oriented in the beginning of the year. And when I say value, I don't necessarily mean just cyclical. So, for example, healthcare can participate. But then you start talking about the elections, and can healthcare maintain it if people start talking about Medicare for all, for instance?
Isn't this outperformance in healthcare, a lot of it predicated on who runs on the Democratic side, if it's Elizabeth Warren or not?
So, it's interesting. As you go through it, if you say it's a Biden, I think you're fine. If Peter Buttigieg is viewed as kind of a moderate, but actually if you look at some of his policies, he's not that moderate. Certainly, if it's a Sanders or a Warren, you have more problems on the healthcare side. But I'm giving as an example. That's one of the issues that's certainly going to come up in election.
But if you get 5% earnings growth, and I will just say what Kramer just said, don't fight the Fed. You have a friendly Fed, and you get some earnings growth. What's the problem?
Again, I think you can see the market run to 3,500 before it backs off to 3,375, which is our year-end target. You're still making money. It just isn't going to be the gangbuster year that you have this year. And I would say I differ a little bit from Jim, and sorry, Jim, if you're watching, where I think the Fed issue last year was the fear that they would cause a recession by going another 4 hikes. Right? By April and May, we didn't have that as an issue for the Fed, but we had fears around trade wars causing a recession. Then by summertime, we were talking about inverted yield curves causing a recession. And by September, October, we were talking about ISMs below 50.
But the market slapped the Fed upside the head, if you will, last December. It wasn't so much what they were going to do maybe after that. It was the fact that the market deemed the move in December was a mistake. And then the Fed got friendly.
The market was falling October, November, December. So I kind of pushed back against, yes, December was another 6%, but you already had fallen about 13% before that. So you can't blame it all on the market punishing the Fed. It was fears that the Fed was in this tightening mode and will cause a recession if they went 4 more times, which at that point the futures were saying they were going to do. So again, don't fight the Fed. Absolutely believe that. But I also think we can't say the Fed changed in January in terms of their entire mode, and yet we've rallied since then. So it's not just about the Fed.
And I guess a lot of this also depends on what happens on the trade front. Sure, a phase 1 deal signing expected in early January, but the Chinese really aren't incentivized to get a phase 2 deal before the 2020 election without knowing who's going to be the next president, if it's President Trump or not.
The question is, how many phases are we talking about as well? You're saying phase 2. There's, could there be phase 20? We think that the kind of, if you want to call it, clash or tension between China and the U.S. are not just going to go away because we signed a phase 1 deal. There's a lot more going on in terms of China kind of challenging U.S. hegemony in the world. The Belt and Road Project is part of that. Building a deep sea navy is part of that. So it's not just trade's one element. It's not just about trade.
Barbara, you want to just give a comment?
Just a quick question on sentiment. You mentioned it's not euphoric right now. And it looks like institutional investors are more in positive. Retail, for the first time, we had positive flows back into stock funds. How powerful do you think that will be going into the first quarter?
Look, if people really want to get excited, we've seen that. You go 97, 98, 99, the money kept pouring in. So it is plausible that people do get excited. The problem is that as the market's been going up, and it's questions, why haven't people put more money to work? I keep getting that. And I think part of this, as the market appreciates, the proportion of people's portfolios already committed to equities are going up. and they have to rebalance, which forces them actually to sell some stock, not buy more. So it's kind of a weird situation where, because my portfolio's done so well, I'm still afraid of 2000 through 2002. I'm still afraid of 2007 through 09. Let me take a little off the table and not be as exposed. I think is still in the mindset. The psyche gets damaged pretty badly. And I think psychologists will tell you, and my son's doing a doctorate in psychology, so he tells me this, that people mourn their losses more than they celebrate their victories. So I think that still is in the back of people's minds, and they're just not willing to kind of go there the full way.
I think that's a fair point.
Yeah.
I really do. Tobias, thanks.
My pleasure. Happy holidays.
You as well.
All right, up next on the show, we've got your last chance trade. Plus, Travis Kalanick is departing Uber's board of directors at the end of the month. Recode's Kara Swisher will join us with her take coming up.
Get your favorite NBA team right here on TuneIn.
A step back, deep three is up and in!
Search NBA on TuneIn and hear all the action. The NBA lives on TuneIn.
Smart Sports Wagering Talk is now on TuneIn. This is Brett Musburger. The Better Network is now on TuneIn. Search BETR. Be better informed. Be better prepared. And remember, cash and tickets is what it's all about.
Cutting for the net, scores! On the goal line, Marchand scores!
Hockey fans, the 2019-20 NHL season is here.
And tucks it home!
And with this team, it's really fun to be a part of a team like that.
And you can hear the action live on TuneIn Premium. From regular season action to the All-Star Game and through the Stanley Cup in June. Hear the home and away call for every game, for every team live. At home or on the go, never miss a game with the NHL on TuneIn Premium.
Upgrade today.
Hey, NFL fan, can't watch the game? Can't be there? No biggie. With your TuneIn Premium membership, you already have an all-access pass to every team and every game in the league. Amazing, right?
Steps up, floats it towards, at the goal line, it's intercepted!
Listen live as the action unfolds or on demand when you can. Anytime, anywhere, all season long.
Right side, it is caught, it is in for the right side for the touchdown to Keenan.
Search NFL today.
This is not a commercial. This is a reminder. With TuneIn Premium, you could be listening to more music commercial-free. Get over 45 commercial-free music stations. Visit TuneIn.com/premium to upgrade.
TuneIn is remembering the biggest college sports moments of the decade, like this one from 2016, when Oklahoma's Baker Mayfield hurls a 49-yard touchdown pass to D.D. Westbrook in a legendary shootout with Patrick Mahomes and the Texas Tech Red Raiders.
Snap, play action, rolling right, Baker, want to go deep, he's going to sling it for the end zone, looking for D.D., he's got it! Oh, mama, he's got a touchdown!
Search college sports on TuneIn to be there for the moments that go down in history. Hey, NFL fan, can't watch the game? Can't be there? No biggie. With your TuneIn Premium membership, you already have an all-access pass to every team and every game in the league. Amazing, right?
Steps up, floats it towards, at the goal line, it's intercepted!
Listen live as the action unfolds or on demand when you can. Anytime, anywhere, all season long.
Right side, it is caught, it is in for the right side for the touchdown to Keenan.
Search NFL today.
15 minutes to go, and here is a check on the closing bell big board. On the top, how the three major averages are trading into the close. In the middle, the biggest Dow leaders, Home Depot, Walmart, and Visa. And on the bottom, the biggest Dow laggards, that's Boeing, 3M, and Cisco.
15 minutes left to go. Barbara, what is your last chance trade?
Lululemon is the stock that's up almost 90%.
Big winner.
It's been a big winner, and it's also not cheap. But the reason, I think it has a very long runway of growth ahead of it. I mean, you look at what they've done the last 7 quarters, their earnings, their sales, Their same-store sales are in the 20s. You look at margins, they have been increasing every quarter for 3.5 years. It's because they have so many initiatives, whether it is increasing their store base, remodeling and growing their stores. International has huge potential. You look at China, they have under 40 stores there. They had just 22 a year ago, and the sales are really gangbusters there. And that is also, by the way, the biggest yoga market in the world. In digital, they're at 30%. They've rolled out categories like men's, which could be a third of their sales pretty soon, and endless product innovation and the brand. They had such a good brand in terms of luxury quality before they began this expansion phase. So I think they've got a long way to go.
Certainly been a winner in the retail space, as you point out. Men's category, very successful for Lulu.
Right, and they haven't even started their real marketing on that. It's been interesting.
All right, up next, uninterrupted coverage of the final minutes of trade. Everything you need to know on this shortened holiday trading day when closing bell returns.
Can you? Introducing a new podcast, ESPN Daily. When you want to go beyond your feed, when you want to get inside the score, when you want to get behind the highlight, there's ESPN Daily. Go deeper into the stories of the moment. Get the exclusive access and insider perspective that only ESPN can give you. ESPN Daily, hosted by me, Mina Kimes. Listen now to ESPN Daily on TuneIn.
Along the goal line, Martin scores! It tucks it home!
Hockey fans, the 2019-20 NHL season is here.
Here's Pietrangelo, he scores!
And you can hear the action live on TuneIn Premium.
The move, and a shot, he scores!
From regular season action to the All-Star Game and through the Stanley Cup in June. Hear the home and away call for every game, for every team live. At home or on the go, never miss a game with the NHL on TuneIn Premium.
Upgrade today.
Hello, I'm Nat Coombs from ESPN's The Nat Coombs Show, which admittedly is 1 out of 10 for original podcast name, but 10 out of 10 for NFL chat. Every week, we're dropping 4 episodes with an all-pro lineup of terrific guests, journalists, comedians, players, coaches, you name it, all getting you up to speed with everything gridiron. The Nat Coombs Show, American football, British accent. Add to your favorites and listen on TuneIn.
With 2020 on the horizon, TuneIn continues looking back at the stories that shaped the 2010s.
In 2011, Osama bin Laden is captured and killed by U.S. Special Forces after a decade-long manhunt. In 2016, Donald Trump is elected the 45th President of the United States after securing 304 electoral votes over Hillary Clinton's 227. And in 2018, a UN report stating the world has 12 years to prevent irreversible climate change.
Search news on TuneIn to be listening when the next decade's big headlines break.
When you're not listening to your team, take it to the end zone, the rim, or the net. Keep up with the biggest moments in sports by following TuneIn on social media.
Block, hook, into the end zone for the touchdown.
From reminders of the live top games to tips of the best sports stations and podcasts.
Welcome to Undisputed. We are live from Los Angeles. I'm Jenny Taft here with Skip
Follow
Bayless.
at TuneIn on Facebook, Twitter, and Instagram to get the most out of TuneIn.
Hey, NFL fan, can't watch the game? Can't be there? No biggie. With your TuneIn Premium membership, you already have an all-access pass to every team and every game in the league. Amazing, right?
Steps up, floats it towards, at the goal line, it's intercepted.
Listen live as the action unfolds or on demand when you can. Anytime, anywhere, all season long.
Right side, it is caught. It is in for the right side for the touchdown.
Search NFL today.
We have a news alert on Boeing. Bill Griffith has the details. Bill?
Yeah, it's not great here, Scotty. We're getting more details now about some of these documents that Boeing supplied to the House Transportation Committee yesterday. A committee official is now quoted by Reuters as saying that these records appear to point to what they called very disturbing picture of concerns expressed by Boeing employees about Boeing's commitment to safety. We've heard these anecdotes before about during the original certification process for the 737 MAX, about some of the corners that had been cut, about some of the games being played by Boeing employees, and of course about how Boeing really dictated the certification process to the FAA. Now it's going the other direction, but now we're hearing more in detail about that process and some of the employees who felt it was not going the way it should. We have reached out to the House Transportation Committee for more comment. We're waiting to hear back at this point. Back to you guys.
Okay. Bill, we appreciate that. Barbara, it's why I asked you earlier that just replacing the CEO doesn't change the story. This thing has hair on it, the whole thing, and it's not going to go away anytime soon, regardless of who's sitting in the corner, the biggest office in the corner.
No, it's not going to go away anytime soon, but I think it's discounted in the stock. And I think we've seen that since this started. You know, where the stock goes down, news comes out, like even this is not good that there's other emails, but it also relates to the same issue, you know, of quality control and was it being hidden. So I think it's in the stock. So that's really my point. No, it's not going to change that, but except it is going to it's already starting the culture change, perceiving that there is a culture change needed of being more open, dealing the soon-to-be new CEO said, we want to work with you. We want regulation. So I think that's a real sea change. So, and I think that was Boeing's attitude before, but now they're saying, okay, maybe it wasn't through the whole company. We are going to make sure it is.
Now, I just feel like there's a potential Pandora's box that you just don't know what else is going to come out and what ultimately is going to happen as it relates to regulators, the board,
Well, you know,
the whole thing.
Scott, that's actually a very good point because, as you know, it's like any of the Me Too stuff. Once one thing comes out and you have incredible scrutiny, you take extra time to go through the stuff. No, it's a very good point you raise. And maybe it's not totally discounting the stock. I think it is, but that's why I'm holding it. But, you know, for people, you don't need to buy it today. I think the risk reward's interesting. You're not going to have a lot of downside, I think. You know, but I think you've got time over this next year.
It's trading down today, down 1.3%. Let's get to the closing bell market zone. Commercial-free coverage of all the action going into the close.
Boy, I was worried we weren't going to have the market zone on Christmas Eve. Thank goodness. What a present. Well, we have Barbara Duran from BD8 Capital Partners and Paul Hickey from Bespoke. He's still with us. Let's kick things off with last-minute holiday shopping. Frank Holland has a look at how shipping companies are performing in this final stretch of the year. Hey, Frank.
Hey, Scott. Speaking of presents, with a 99.8% on-time delivery rate, UPS leads all the major shippers in the final 4 week before Christmas and Hanukkah, of course. Amazon, UPS, FedEx, and the Post Office all separated by 0.1%. In general, over 95% is considered good, but you have to keep in mind, every 0.1% below 100%, that equals 86,000 packages that did not arrive on time. The 33 days between Black Friday and New Year's Eve, the shortest window possible. UPS is also the leader for on-time delivery for the holiday peak since Black Friday. New data shows deliveries are on pace to reach 2.5 billion packages, higher than previous estimates. Back over to you.
Frank, thank you. Paul, take a look at UPS. It is up 21% this year. FedEx down 6%. Which one do you like here?
So of the two, I think FedEx has its problems it's still trying to work through. I think the whole TNT acquisition, that's been a big problem for the company. If I was to pick one of those, I'd probably take FedEx at this point because it's more out of favor. But the thing is, I mean, both these companies have a major competitor in place now with Amazon delivering a lot of its own packages. And, you know, that is something to worry about. They're one of the best logistics-oriented companies there is. But just this whole strength of packages, what we're seeing this year, it points to a pretty strong holiday season.
Yeah, Amazon's certainly one of the big threats FedEx faced as it saw in its earnings. Let's switch over to Netflix. CEO Reed Hastings seeing a jump in his 2020 pay package. Julia Borson has the details. Hi, Julia.
That's right, Seema. Reed Hastings will be getting about a 10% raise in his total compensation next year. Hastings will earn $34.7 million, the company disclosed yesterday. Now, the vast majority of that, $34 million worth, will be in stock options. That's up from $31.5 million in total compensation this year. Now, check out the stock's bumpy ride over the past year. Still, it is up over 40%. Netflix's number 2 executive, content chief Ted Sarandos, will also get about a $3 million pay bump for next year for the same total compensation as Hastings. Guys, back over to you.
All right, Julia, I mean, Barbara, most of this gain has happened in the last few months. Stock has ripped over the last 3 months. You own it or no?
Netflix?
Yeah.
Yes, I'm a big owner, and I have been for some years. And if we're talking about his pay, he deserves every penny. I mean, this is a guy who took this from a mail-order DVD business, had the brilliance and strategic sense to build it into what it is today. And I think he's making the right moves in terms of he's known the competition is coming. And so he has been building a huge content library that I think will stand them in good stead for a long time to come.
All right, well, Tesla, that stock is on pace to close at a record, hitting that notorious 420 mark for the first time ever yesterday. Remember, back in August 2018, Elon Musk said he would consider taking the company private at that level. Morgan Stanley's Adam Jonas out with a new note today reiterating his $250 price target on Tesla, a significant pullback from these levels. Jonas says investors should prepare for a positive surge in sentiment on Tesla through the first half of 2020, but he is not bullish over the long term, questioning whether all of it is sustainable, at least the bullish sentiment. All right, we have less than 5 minutes to go, or just about. Uber co-founder Travis Kalanick is resigning from the company's board of directors. Let's get to Josh Lipton. Josh?
That's right, Scott. So Travis Kalanick saying in a statement, Uber has been a part of my life for the past 10 years. At the close of the decade, and with the company now public, it seems like the right moment for me to focus on my current business and philanthropic pursuits. Kalanick helped transform Uber into a true ride-hailing powerhouse, but he was also blamed for cultural problems at the company and was ousted as CEO in 2017. This news coming as Kalanick has sold his entire stake in Uber, or what analysts peg at roughly $3 billion a stock. Uber CEO Dara Khosrowshahi saying that he was enormously grateful, in his words, for Kalanick's vision and tenacity. Guys, back to you.
Paul, do you have a take here on Uber?
I think you look at Uber and it's an overhang on the stock is pretty much out of the way now with him selling his existing stake, and you see why the stock has been weak so long. One reason, I think, so that's one thing for the stock. And getting back to Tesla, I think what Tesla is, it's a barometer of risk appetite in the market, and when that stock's rallying like it has, it shows you that investors are enthusiastic about things.
There's so much noise around Uber, Barbara. Is it better just to own a company like Lyft? Less news, less noise?
No, they're very different business models, as we know. Lyft is focused strictly on the ride sharing. That's why their share in the U.S. is very strong. And Uber, they have Uber Eats. They have all sorts of businesses that they have in the last month or so, because of shareholder pressure, committed to, okay, either we get them to profitability or we may do something like exit or do something else. So
got it.
Either
Interesting
one.
Perspective.
Either one.
All right, we have just about 2 minutes left to go. Let's send it over to Rick Santelli for a check on bonds. Hello, Rick.
Hello, and if we had a big auction today, and we did, it certainly had a large effect on a thin market. Look at an intraday of 10s. You see that break when we broke once again from that 195 level? That was right after a 5-year note auction. I graded as an A-. Look at the 1-week chart. Another failure in the mid-190s. And with these low interest rates, everybody's going to investment grade. Look at that 2-year chart. We're almost at the tightest in 2 years. Bertha, looks like NASDAQ's going to stick a perfect 10.
And Apple, a big reason why, at yet another all-time high. The stock has had an incredible run, the best of the decade this year. And yet, when you take a look, it still remains under-owned on a percentage basis compared to the likes of Netflix, which has 84% institutional ownership. Peloton, very owned by institutions, but today looks to close just below its IPO price. Merry Christmas to you, Bob. Over to the NYC.
And Merry Christmas to you as well, Bertha. Flatter day, last 2 days really, but the uptrend is still intact. Want to mention the industries that are still moving on the trade news. Caterpillar, another new high. Illinois Toolworks, United Rentals. Again, cyclical names tending to do very well, up and down with the trade talks. And a bit different with the banks. Banks started moving when the yields came off their lows in early October. Another new high for Bank of America. Look at that move since October. There's the closing bell on Christmas Eve. Last year, down 2.7%. This year, flat. Totally different situation compared to 1 year ago.
And welcome to a special edition of Closing Bell on this shortened holiday session. I'm Scott Wapner in today for Wilfred Frost.
And I'm Seema Modi in for Sarah Eisen.
All right, here's how we finish the day on Wall Street on this Christmas Eve. Take a look at the major averages. Well, the S&P is down by less than 1 point. The Dow The Dow is down about 35. The NASDAQ is the outperformer, and that is the one that has been on a run, a record close for the NASDAQ of 10 consecutive sessions. The S&P, by the way, right now is having its best year since 2013. We do have a few more trading days left in the year, and you could still notch the best year since 97. So we'll see where things shake out, but people are already apparently going for the eggnog.
Yes.
Because trading was a little light, as they say, down here today.
Certainly a different tone from last year's Christmas Eve. Joining us now to talk about the markets, still with us, Barbara Duran, Senior Portfolio Manager at BD8 Capital Partners, Paul Hickey, co-founder at Bespoke Investment Group, along with Sandy Biller, Portfolio Manager at Biller & Co. Great to see you all. Sandy, I'll start with you. What do you make of today's market reaction?
Yeah, well, I think it's just, light volume, but I do think this year we're in a complete market melt-up, and so it's kind of an interesting time where things can get a little bit overdone, and I'd be kind of cautious here and look to maybe take some profits and sell some of those names in the portfolio that might be a little bit overvalued here.
And I wonder, Barbara, if you think that you do get some selling once you turn the calendar over. People don't want to sell now, right, for tax purposes. You get to January, maybe people are taking a look at their portfolios a little closer, say, you know what, I've had a lot of great gains this year. Let me come back off the top of the mountain.
I think it's the right question. I think we're all debating that. It's because you see this kind of a run, you go, it's normal to take profits. And I think you're right. There's been hardly any losses to offset tax gains if you're a taxable investor. But I think, for the reasons Tobias talked about earlier, I think sentiment is not overdone here. I think institutions are really in the midst of repositioning their portfolios toward more cyclical, industrials, wherever they think they're going to find earnings potential greater than where they've been. I think that's going to continue into January. But frankly, I wouldn't be surprised either way. But if there is a bit of a pause, I think that's, you wait and see, and then you can buy, stocks that you want to add. Because I think there's a lot of cash still coming in and still needs to come in.
You do, Paul. Generally, when you have a year like this, I mean, you look at market data, as closely as anybody. You do traditionally get a positive year following a strong year like we've had.
Right. So what we do is, in our year-end outlook, we look at the market from like a ton of different angle and viewpoints. And what we're seeing is, well, there's nothing really suggesting a rip-roaring rally for 2019 or 2020. So I'm dating myself, but there's nothing really suggest below average returns either. So normally we see an outweighing of pros or cons versus the other, but right now it's pretty much evenly split. And I think that leaves you with the right thing. The main thing to watch is the Fed here, and as long as the Fed sticks to its words, and they did a 180-degree turn last December, so it's possible they could become more hawkish, even though they basically said they haven't been. But if they don't, and the economy remains stable, the path of least resistance is higher.
On that note, we've been looking at some of the big outperformers this year. I just want to draw our attention to shares of AMD, leading the NASDAQ 100 today, closing up by more than 2% after RBC upped its price target to $53, citing solid channel checks related to gaming chips and data center sales, which the firm says is a positive for NVIDIA as well. And Barb, I would point out, this is actually one of the best performing stocks on the NASDAQ for the year, not just today.
I know, and it looks like that performance can continue. The RBC note was interesting because they had done their own channel checks. And if you look at what share they have in the server market, I think they do maybe a couple $100 million, if that, and it's a $10 billion market. So all they have to do is get, a little bit more share, and that's a positive. And they obviously sell into the gaming market, which is a nice, steady, secular grower. So I think it's a good call. Again, when you've had such a run and all the semis have been performing, you go, okay, is it overdone at this point? I think there's probably a bit more to go.
And big part of the rebound has been that China trade war risk has been removed for now.
Right, and the semis are, if there's any group that's been a leading indicator of the market over the last several years, it's the semis.
Why is that?
We talk about the transports, but the semis are ubiquitous in everything we use: dryers, hair dryers, watches, phones, everything. So if you're going to see a faltering in the economy, it's going to show up in the semis. And the relative strength of the semis has peaked before every major sell-off we've seen over the last several years. And I think just today, again, the semis are relative to the S&P are at another new high.
I do wonder, though, Sandy, about technology. It's the best performing sector as a sector. It's up more than 40%. Paul Meeks, who runs a portfolio loaded with tech stocks, earlier today was, maybe it's time to feel a little queasy about where it is and not urging people to continue to buy this space, at least at current levels. How do you feel about that?
Yeah, I think we are very stock specific at our Villa Rebalance Fund, and so we own On Semiconductor, which is a great name that is relatively cheap, and it's all involved in building out the 5G network. And so while they had no content at all on 3G and 4G, they've got $100 per base station. So I think it's going to be a big stock, and it's very cheap. So I think you got to be very stock specific when looking at the individual sectors.
Yeah, I want everybody to stay with us. I want to get back to Bob Pisani for a look at how this Christmas Eve compares to the big sell-off we saw last year. Bob, it was painful and scary a year ago.
It was. 2.7% drop here. What a difference a year makes. December 24, 2018, it was the worst Christmas ever for the stock market Christmas Eve. The S&P down 2.7% for the day. At this point, we were down 15% for the month to date. It was the culmination of a month of bad news, beginning with President Trump's "I am tariff man" comment. Remember that? That was December 5th. Market dropped that day. Then the Fed raised rates on December 19th. The S&P was down 1.5% on that day. And that led to a 4-day drop in the S&P 500, culminating in the Christmas Eve drop. So what is different this year? Virtually everything is different. Everything is reversed. Last year, the tariff wars were intensifying in December. This year, there's hopes for a tariff truce. The Fed was in hiking mode last Christmas. It's cut 3 times this year, and it's now in neutral. There were worries about a global slowdown at that time and a possible recession in late 2019. Now there is some evidence, the global slowdown may be bottoming, and there is almost no talk of any imminent recession. Finally, there were concerns about a long-term partial government shutdown of the U.S. government last year, which is also not an issue this year. So here's the bottom line, guys. Better clarity on those major issues has translated into more confidence about earnings, and we all know that's the main mover of the markets. Guys, back to you.
Yeah, Bob, thank you. I truly believe it's all about the Fed. I mean, I really do. We would not be sitting here having a conversation about a fabulous year without the Fed having made the pivot. I mean, you could have everything else. You had the trade war, in full effect, in full rage, and stocks were still able to hit new highs, and it's because of the Fed.
You're absolutely right, in my view, because as we chatted about earlier, in the beginning of this year, the Fed was supposed to raise rates, or the expectation was a number of times, 3 or 4 times. And so it really always is about the Fed driving the markets. And then you had the trade is real. And that's also, I have a question about what will happen with business confidence now that there's some stability in the trade, except there's still a lot going on. And it's been this big disruption of the global supply chain. So that's still a question for me, and what that means for capital spending. And that, I'm not sure what's going to happen there.
Part of the Fed discussion, Paul, I think I would point out not just stocks sitting in record high territory. Gold is on track for its best year since 2010. What do you make of that outperformance?
Well, so this is the year where it was sort of hard to lose money in any asset class, and that's you can thank the Fed for that. So the Fed has certainly played a large role in what's been going on here. They've become more accommodative as the economy showed weakness, and if they're going to take a more dovish stance, I mean, Bob was saying they've switched to neutral. I think they're maybe a little bit more to the hawkish side of neutral, but otherwise, I think he summed up everything correctly. We're at a much different place. The one difference is that whereas we were at multi-year levels of oversold readings last Christmas Eve, this year the market's extended, but it's not extended. It hasn't been a straight run higher, and the rally we've seen over the last month, Thanksgiving to now, is pretty much in line with the average we've seen historically at this point of the year, and leading into the last week of the year, which is historically one of the best weeks of the year, especially when you're up already 20% heading into that last week. Last week was the best final week of the year for the S&P 500 in its history, 6.6%.
That's why we love you. Have all the great stats ready to go. Paul, thank you.
Merry Christmas, happy holidays, and happy healthy New Year to you both.
Thank you both.
All right, Sandy, you as well. Thank you for joining us today. We'll see you in the new year. Up next, we're going to talk to Recode's Kara Swisher about Travis Kalanick's exit from Uber and her tech outlook for 2020. That is when the closing bell returns in just 90 seconds.
Fidelity, online U.S. stocks and ETFs are...
The S in Audi S-Line stands for many things like sporty, stylish, streamlined, and now seductively priced. Like the new Audi A4 S-Line, which you can now have from £359 per month, £2,154 initial rental. Test drive one at your local Audi centre, but you'll have to be swift. The offer ends soon. Search Audi S-Line. Audi. Vorsprung durch Technik. With 48-month contract hire, 10,000 miles per annum, 18s and over, subject to status. Damage charges may apply. No ownership. Ordered by 31st of December 2019 from participating centres. Audi Financial Services. Visit audi.co.uk.
At Asda this Christmas, our whole basted turkey is just £4 a kilo, and our Growers Selection vegetables are only 20p per pack. Get a broccoli, 1 kilogram of carrots, and 500 grams of parsnips or sprouts. Asda, let's make Christmas extra special. Selected stores subject to availability. Broccoli, 360 grams, ends 26th of December.
19p? What will that get you at Christmas? 5 minutes to Panto, a very unpopular Secret Santa. This week at Tesco, you can get sprouts, carrots, or parsnips from just 19p. Our festive 3. That should get you on the nice list. Tesco, delivering Christmas for 100 years. Selected stores excludes Express, ends 26th of December.
Smart Sports Wagering Talk is now on TuneIn. This is Brett Musburger. The Better Network is now on TuneIn. Search BETR. Be better informed. Be better prepared. And remember, cash and tickets is what it's all about.
Uber co-founder Travis Kalanick resigning from the company's board of directors effective December 31st, also confirming through a spokesperson to CNBC that he has now sold his entire stake in that company. In a statement, Kalanick saying, quote, Uber has been a part of my life for the past 10 years. At the close of the decade and with the company now public, it seems like the right moment for me to focus on my current business and philanthropic pursuits. Let's bring in Kara Swisher, executive editor at Recode. Kara, nice to see you.
Good to see you.
You expected this? If he was selling his stake, why would he remain on the board, right?
Yeah, I think it's been a long time coming. You know, he hasn't been as involved. He's obviously running a business that's competitive with Uber. And so it seemed inevitable that he would go. I don't think he has a terrible relationship with the CEO, Dara Khosrowshahi, but I don't think he's considered a help on the board. And so I think, you know, as he's shed those shares, it just sort of indicated that he wasn't influential at the company anymore after spending so much time trying to keep hold of it, which is really kind of ironic. I was thinking about that this morning.
Do you take any part of this as his belief or lack thereof in the company and its fundamentals, its business model, anything moving forward?
I think it's his belief that he doesn't have influence at the company and therefore can't, you know, do what he wants to do necessarily. You know, his ouster was controversial, obviously, and some people feel like they need a CEO like that who is as aggressive as he is in this time. I think the problem with Uber is economics and cleaning up a lot of the mess that he made as CEO. I think you'll see more departures from the board coming, possibly of the Saudi investors have a board seat, maybe a tightening up of the board itself, and then some really strong thought about how to deal with a lot of their problems around economics and other things. And you'll see, you know, what Dara Khosrowshahi has been doing is cleaning up a lot of stuff and trying to figure out how to move through this, I think, probably problematic economic problem they have, which is how do you make money from the core business, which he has indicated, he answered a question from me at a New York Times conference, that is going to be their business going forward, despite all these other things they're working on.
What does Uber lose here at all by seeing Kalanick move on and step off of the board? Is there anything that Uber loses here by not having that expertise from the founder of the company?
No, not in this case.
No,
I think this was a toxic founder. So I don't know. I think he's a really interesting and creative person. His new business is interesting. You know, he's been investing, but this cloud kitchens thing, which he actually took money from the Saudis, is an interesting business. And so he's off doing he's an entrepreneur. Whatever you think of Travis Kalanick, he's a really interesting entrepreneur. And so I think he's more interested in doing his next thing. He's had lots of companies. You forget he had several companies before Uber, and I'm sure he'll have several companies after. And so, you know, I don't think it's unusual for a founder to leave, but he's actually not he's one of the founders. Others remain on the board. And I think the issues around Uber are around execution now, not necessarily vision. And I think they've had plenty of vision, and they now need to figure out what the business model for this company is if they want to continue going forward.
A laundry list of challenges that Dara Khosrowshahi faces as we head into a new year. Competition from Lyft. Does he sell that India stake to a local competitor inside the country? As you point out, also its relationship with the Saudis going forward. But what do you think is the top challenge that Dara faces next year?
I think the employee base. I think the issues around AB5 and how to pay people, I think that's always been top of mind for many people looking at Uber, is the cost structure and getting profitable on a real basis instead of, Travis launched enormous amounts of expansion and he was way ahead of his skis, I think. But really, making that business, that core sharing business, the ride-sharing business, a really profitable one, working on Uber Eats, seeing how that does. They've got, it's an amazing brand. For whatever you think of Travis Kalanick, he's built an amazing brand here. And now they really have to make it into the kind of business that is not, they have a lot of challenges from a business point of view. And we'll see where it goes. But again, people love to use it. It's a product people love to use. They probably have to raise prices. They've got all kinds of regulatory issues, as you've seen in London and elsewhere, as they continue to do. And they have to, but still, it's a product people love to use. I use it all the time. I think a lot of people use that and Lyft. It's just a question of it's economic and if the prices have to go up or if it has to be part of a bigger company that is able to do that.
You use, Caro, words to describe Uber tightening up in economics, and it just gets me thinking more broadly about the Valley itself. And, as a result, partly of maybe Uber and what we saw in WeWork, if the Valley is going to be different at all in 2020, that venture capitalists are going to tighten up, to use your words, the way money is being spent out there, where economics, another word you use, are going to be more in focus than perhaps they have been in the last few years, as there's more scrutiny around these companies that are in the pipeline to go public in the new year.
Well, not from the venture capitalists. The venture capitalists have tons of money. They've been throwing money, at companies in enormous amounts. SoftBank is not, everyone thinks SoftBank is so unusual, but there's lots of money everywhere for startups. And I think it's Wall Street that has put some brakes on this and has sort of been the firewall, saying, wait a minute, we don't want to accept these companies, or these companies are suffering in terms of stocks once they get to the public offering, maybe because they didn't go public quickly enough, maybe they didn't have the discipline, maybe because Wall Street can do math. You know what I mean? Like, look, these businesses have to make money at some point. And then on the other side of the coin, you have businesses like Facebook and Google, which are minting money, but are enormously powerful and probably in need of some regulatory scrutiny. And so, you have that coming too. And so it's interesting because there's a lot of really profitable businesses that are now so large, they're sort of, they're taking the sunlight away from new and innovative businesses. And so that's the other side of the coin, is that issue for the big companies.
Yeah, no more tolerance for fuzzy math in the year ahead.
No. Well, no, but then again, there's some really interesting ideas, whether it's AI stuff that need to be invested in, or VR or AR or healthcare stuff. There's all kinds of really around food that needs investment and that will have to take a while to be fully baked. And so there should still be, the idea that you want to invest in innovation and not worry as much about the business. But once businesses become businesses, they have to act like businesses. So Uber is a business. It is no longer a visionary thing. Airbnb is a business. Whatever is going public is a business. And when they get to Wall Street, they have to put on their adult pants and start acting like adults, essentially.
Yeah, Airbnb will be one to watch next year. Kara, thanks for joining us today on Christmas Eve. Kara
Thanks
Swisher.
a lot.
Still ahead on Closing Bell, hotels have been red hot in 2019 while online travel companies have been underperforming. Up next, find out if that could reverse in 2020.
Plus, we'll break down which retailers have been crushing Christmas when we speak to former Walmart U.S. CEO Bill Simon.
This CNBC program.
I've always loved a kitchen experiment, especially smoothies. I've blended all sorts of mad combinations. Strawberry and charcoal, broccoli and chocolate. Not my best, that. But when I test blenders in the Witch Lab, it's not about flavour, it's about performance. Our tests use proper tough stuff, hard ice, strong veg, rough nuts. And the blenders that can hack it are the only ones we recommend for your kitchen.
Which tests harder so you can buy smarter. Visit which.co.uk.
Be honest, how much attention are you really paying to this advert? 25%? Maybe 30% if you're sitting in traffic and the kids have stopped arguing? What about 0%? Well, now's the time to give 0% attention, because for a limited time only, the entire Mini range is available with 0% APR. All you need to decide is which Mini is perfect for you. Good to know we've now got 100% of your attention. Search 0% Mini to find out more. Who's in? Minimum 25% deposit on 24-month select agreements for new models registered by 31st of December 2019 at participating retailers, subject to availability. Excludes Mini Electric. UK residents aged 18+. Guarantees may be required. Mileage and other conditions apply if you return the vehicle. T's and C's apply. Mini UK, a trading name of BMW UK Limited, is a credit broker, not a lender.
Want to hear about the latest and greatest things to listen to on TuneIn? For reminders of the biggest live sports games, debates, and breaking news stories, follow @TuneIn on Facebook, Twitter, and Instagram to stay connected with the audio that matters to you.
Ah, finally another commercial, said no one ever. Visit TuneIn.com/premium to upgrade now and get over 45 commercial-free music stations.
From ESPN and the award-winning producers of The Sterling Affairs comes the latest season of 30 for 30 podcasts. 4 brand new stories of espionage.
He wanted this team to be the Barcelona of women's basketball.
Resilience.
I started to scream. I tried to get away.
Corruption.
It's the culture of win at all costs.
And rebirth.
How will we ever rebuild it?
30 for 30 podcasts, season 6. Listen in favorite 30 for 30 podcasts on TuneIn.
Far wing elevates, triple bucket.
The war of the crowd. The shot clock ticks down. Will the ball go in? The suspense is pure torture, but you wouldn't miss this for the world. And the replays just don't cut
To
it.
the sideline, the man fleet for 3.
TuneIn Premium brings you every minute of the NBA season streaming live, so you can be there when it matters most. Hear it now. Hear it live on TuneIn.
Fake in the lane, turnaround jumper from 8 feet is good on the
Search
right block.
NBA today to start listening.
Hotel stocks have been red hot this year, but online travel stocks have given investors the chills. Seema breaks down what's behind the divergence.
Yeah, it's been an interesting trend to watch this year, Scott. The hotel operators are on track to close the year with big gains. Marriott, Hilton, and Hyatt all up about 32% or more. But it's a very different story for the online travel operators. Expedia, Booking Holdings, and TripAdvisor, all 3 underperforming the broader market in 2019. So why the divergence? Well, despite soft occupancy levels, SunTrust says investors are increasingly placing their bets on these hotels that have better business models. Investors like the asset-light model, and they see future earnings growth in these companies, that even in a weak growth environment, as earnings are really being driven by a very healthy level of new hotel openings from which companies collect franchising or management fees. Now, online travel operators all trading down after Expedia's disappointing earnings report in early November, from which the sector has not fully recovered. The big thing to watch next year is who will take over for Mark Okerstrom, who was fired off of Expedia. The chairman, Barry Diller, is now looking for a new CEO, and I'm being told, Scott, that whoever takes this place of Mark Okerstrom will really have to figure out how to fend off competition from Google, which has really been a big threat for the broader online travel sector. You can see shares of Expedia up about 8% since Mark Okerstrom was fired.
I was looking at the divergence as you were talking. I mean, Marriott's up 50%
Right.
this year. It's had a great year.
And see, that's the thing, because the industry data will show you that occupancy levels are actually pretty soft in this environment. Some businesses pulling back on travel, but yet these stocks have done pretty well because their pipeline looks very strong into next year.
All right. Up next, former Walmart U.S. CEO Bill Simon tells us which retailers are giving the biggest gifts to investors this holiday season and which are leaving them a lump of coal. When Closing Bell comes right back.
Hey, NFL fan, can't watch the game? Can't be there? No biggie. With your TuneIn Premium membership, you already have an all-access pass to every team and every game in the league. Amazing, right?
Steps up, floats it towards, at the goal line, it's intercepted!
Listen live as the action unfolds or on demand when you can. Anytime, anywhere, all season long.
Goes right side, it is caught, it is in for the right side for the touchdown.
Search NFL today.
Upgrade to TuneIn Premium and get over 45 commercial-free music stations.
You'll also get live commercial-free news,
Plus live play-by-play games from NFL, MLB, NBA, and NHL. Visit TuneIn.com/premium to upgrade.
Hey, NFL fan, can't watch the game? Can't be there? No biggie. With your TuneIn Premium membership, you already have an all-access pass to every team and every game in the league. Amazing, right?
Steps up, floats it towards at the goal line. It's intercepted.
Listen live as the action unfolds or on demand when you can. Anytime, anywhere, all season long.
Right side, it is caught. It is in for the right side for the touchdown.
Search NFL today.
Spend Christmas Day listening to the NBA on TuneIn Premium. Featuring 5 big matchups on the holiday schedule. Unwrap the action starting at 12 Eastern when the Celtics take on the Raptors in Toronto, followed by the Bucks and the 76ers at 2:30. The holiday cheers continue with the Rockets and Warriors at 5 and the Clippers and Lakers at 8. And a showdown between the Pelicans and Nuggets at 10:30. 'Tis the season with the NBA on TuneIn Premium. Upgrade today.
Introducing a new podcast, ESPN Daily. When you want to go beyond your feed, when you want to get inside the score, when you want to get behind the highlight, there's ESPN Daily. Go deeper into the stories of the moment. Get the exclusive access and insider perspective that only ESPN can give you. ESPN Daily, hosted by me, Mina Kimes. Listen now to ESPN Daily on TuneIn.
Did you know your favorite radio stations are in your pocket? Yes, the TuneIn app lets you listen to the same radio stations you pick up on your home or car radio anywhere you want. To see all the stations broadcasting in your area, find the local radio section on the home screen. Keep it local with TuneIn.
Here's a look at the closing bell big board on the top. The S&P 500 and the Dow closing lower while the NASDAQ was able to close at yet another record high. In the middle, some of today's best performing sectors: consumer discretionary, utilities, and financials. Now on the bottom, today's worst performing sectors: industrials, communication services, and healthcare.
It is time now for a CNBC News update with Bill Griffith. Hey, Bill.
Hey, Scott. Here's what's happening this hour. President Trump addressed the troops from his Mar-a-Lago resort in Florida today, taking time out to talk about the accomplishments of the armed forces.
This Christmas, I hope every member of our military will feel the overwhelming love and gratitude of our nation for your faithful service. Starting January 1st, you'll be getting your largest pay raise in more than a decade.
Meanwhile, U.S. military personnel have begun an operation to deliver Christmas presents to those troops who are stationed in Syria right now. Those taking part in the so-called Holiday Express transported stockings stuffed with gifts to 5 bases in the country. In addition, a military band traveled by helicopter playing Christmas carols as the soldiers received their presents. Nice. And the 4 generations of Britain's royal family got into the festive spirit by preparing Christmas treats for charity. Queen Elizabeth, Prince Charles, Prince William, and Prince George all set up shop in the music room at Sandringham, where they spend the Christmas holidays, to make a special Christmas pudding. This as part of the Royal British Legion's Together at Christmas initiative. Happy Christmas, as they say in England, to all of you. And to all of you, a good night. Yes. Thank you.
All right, Bill. Thank you.
See ya.
That's Bill Griffith.
All right, let's move on to retail. Retail stocks seeing nice gains this year, up more than 20%. And our next guest thinks the consumer is healthy and that this holiday season is shaping up to be one of the best in a decade. Let's bring in Bill Simon, former Walmart U.S. President and CEO. Bill, pleasure to have you on the show today.
Hey, great to be with you. Merry Christmas. Happy holidays.
And to you. We have stocks at record highs. The consumer is strong. So which retail companies do you think have been best at really benefiting from this strong consumer story?
Well, as you said, the consumer has just been in great shape this year. Winners, I'll tell you, as I watched them all the way through Black Friday through just yesterday, Target has done a really good job. Brian Cornell and his team there have got things firing on all cylinders. They had some great product. I think they're winning the battle in toys, and their inventory levels right now look really good. They're transitioning well, and their sell-through has been good. So I think Target has done well, and really all the big retailers, because of the short distance between Thanksgiving and Christmas this year. This is the shortest calendar that we have. It looks like consumers went to the bigger stores to get most of their trips done at once. So I would tell you that I think Target, Walmart, Costco in the brick and mortar world did well, and then of course Amazon online.
Which companies? Go ahead.
No, go ahead.
Well, which companies do you think have a lot to improve on in terms of their digital strategy and really trying to target the consumer?
Well, I think from a real estate perspective, a lot of the B and C level malls struggled. So anybody who's got a big presence in those places struggled. JCPenney still, I think, although they've gotten a little bit better, haven't quite worked it out yet. So I think they struggled through this some, and then the department stores. I don't think this was particularly good for them. I think they were more neutral. I don't think it was particularly bad either.
The way you answered the first question, Bill, to me tells the whole story, right? You went down the list: Amazon, Walmart, Target, Costco. I would throw in Best Buy as being part of the group that has it all. That's great, but it's also the problem because it's them and it's everybody else. And I don't see that changing anytime soon, do you?
Well, it is them and then everybody else. If you take those 5 that you mentioned, you're talking about 40 or 50% of retail. And if those guys are growing above the retail average, which they have been all year, it makes it very difficult. They sort of suck up all the oxygen in the room and make it difficult for others to grow. But that doesn't mean that retail itself is not healthy. Those 4 or 5 big guys are really dominating right now.
For sure. It just means that investors, like consumers, are discerning when they decide where they're putting their dollars. Why would they put them towards, and I'm just throwing out the names, a Macy's or a JCPenney, when you can put it at a Target, which is, as you said, with Brian Cornell as CEO, knocking it out of the park, one of the best performers of the year, or any of the big 5?
Yeah, I think that's the same decision that you said investors make, the same one consumers make. If there's nothing special in the store and there's nothing special in the stock, I'm not going to take a risk and go there or put my money there. I'm going to go with the things that I know are going to deliver. And right now, that's the big 5.
Is there a room for opportunity here for Amazon to improve its business model? That Wall Street Journal report just 2 weeks ago saying that you can basically sell trash on the website.
I think Amazon, that's the 2020 outlook for me. That's things that I'm looking for. Amazon this year, we've gone from Prime with 2-day to 1 day to now hours, and we know it can't go negative. So we're done with the shortening of the time window, and through each one of those transitions, Amazon has really struggled with building or rebuilding the profitability of the model. So I think that's what we have to look for next year, as those of us that watch the retail industry and investors. Can Amazon deliver in 2 hours and make money? And that, I think that still remains to be seen.
Amazon up 19% this year. We'll leave the conversation there. Bill, thank you for joining us. Bill Simon.
Thank you.
Up next, find out how a relatively new mortgage app is reducing bias against minorities trying to buy a home.
Plus, China's ByteDance says it has no plans to sell popular app TikTok to alleviate privacy data in the U.S. We've got details coming up later on the closing bell.
CNBC News Update is sponsored by Comcast.
The Honda Jazz, the car that feels fabulously small on the outside, yet deceptively big on the inside, with its incredible storage solutions and magic folding seats. Not to mention the suite of advanced safety features. And now with the small but big Jazz event, it's available with 0% APR representative and 5 years complimentary servicing until January 31st. Visit your local dealer to find out more. Honda dealers are credit brokers, not lenders. Finance provided by Honda Finance Europe, authorized and regulated by the Financial Conduct Authority. Terms and conditions apply.
Ho, ho, ho. Who's made a list this year?
I want a new phone, one with amazing cameras, ultra-wide lens, of course, live focus video. Well, it has to be 5G ready to stream all my films. Can it come with something awesome to listen to them through?
Darling, I think he was talking to the kids.
Get everything you want and more. Purchase a Samsung 5G ready device and claim a pair of silver wireless Galaxy Buds at no extra cost. Shop our 5G handsets in store or online at your local O2 store or o2.co.uk. 18 plus. Offer excludes Galaxy Fold 5G. Purchased by the 25th of the 12/19. Claim from Samsung within 30 days. T's and C's apply.
19p? What will that get you at Christmas? 5 minutes to Panto, a very unpopular Secret Santa. This week week at Tesco, you can get sprouts, carrots, or parsnips from just 19p. Our festive 3. That should get you on the nice list. Tesco, delivering Christmas for 100 years. Selected stores excludes Express, ends 26th of December.
Start hearing more of what you want. Upgrade to TuneIn Premium and get over 45 commercial-free music stations, live commercial-free news, and every live NFL, MLB, NBA, and NHL game. Visit TuneIn.com/premium to upgrade.
When you're not listening to your team, take it to the end zone, the rim, or the net. Keep up with the biggest moments in sports by following TuneIn on social media.
Block, hook, into the end zone for the touchdown.
From reminders of the live top games to tips of the best sports stations and podcasts.
Welcome to Undisputed. We are live from Los Angeles. I'm Jenny Taft here with Skip
Follow
Bayless.
at TuneIn on Facebook, Twitter, and Instagram to get the most out of TuneIn. The puck drops. 12 players face off to win. The suspense is pure torture, but you wouldn't miss this for the world. TuneIn brings you every minute of the NHL season. Listen live to hockey when it matters most on TuneIn.
Hi, I'm Tom Haberstroh, host of the Haberstroh podcast. I'm partnering with TuneIn to answer a few questions and get you prepped for NBA Christmas Day. My favorite NBA Christmas memory is, I got to go with 2010 Heat Lakers. First year of the LeBron in Miami, going to the Staples Center against Kobe and the defending champion Lakers. Everything said the Lakers were going to win that game, but LeBron had a triple-double and blew out the Lakers. Search The Haber Show to listen to new episodes every Friday throughout the NBA season on TuneIn.
Mortgage lender says it's seeing a huge jump in business from minorities. Diana Olick here with that story for us. Hi, Diana.
Hi, and it's crediting its online lending platform and its app for reducing bias against some borrowers. Better.com, which reported 350% growth itself last year, also saw a tenfold increase in married LGBTQ couples, 5 times the number of single women, a 675% jump in Gen Z borrowers, more than 500% growth for Hispanics, and over 400% growth for African Americans. The impersonal online platform rates borrowers solely on their financials.
We're actually, by creating an online transparent process, helping reduce the friction and catalyzing access to homeownership for a segment of the population that traditionally hasn't been able to participate in it.
More than 40% of Better.com's customers used their mobile phones to apply. Garg says Better.com did $700 million in loans per month this year and expects to do at least $2 billion per month by the end of 2020. Back to you guys.
Diana, it's a great story. Thank you for bringing it to us, Diana Olick. Up next, the year of the IPO. Despite WeWork's woes and Uber and Lyft's struggles, there were some major new outperformers in 2019, and we will break down the big winners when Closing Bell returns.
How's work? If you're not loving your job and you're getting those Sunday blues, now's the time to make a change. With a LinkedIn app, it's now easier to find and land the job meant for you. There are millions of jobs on offer, and the LinkedIn app helps you hear about them first. Research shows applying within the first 10 minutes increases your chances of hearing back by up to 4 times. Stay in the know and grow your career. Download the free LinkedIn app today.
Ho, ho, ho. Who's made a list this year?
I want a new phone, one with amazing cameras, ultra-wide lens, of course, live focus video. Well, it has to be 5G ready to stream all my films. Can it come with something awesome to listen to them through?
Darling, I think he was talking to the kids.
Get everything you want and more. Purchase a Samsung 5G ready device and claim a pair of silver wireless Galaxy Buds at no extra cost. Shop our 5G handsets in store or online at your local O2 store or o2.co.uk. 18 plus. Offer excludes Galaxy Fold 5G. Purchased by the 25th of the 12th 19. Claim from Samsung within 30 days. T's and C's apply.
19p? What will that get you at Christmas? 5 minutes to Panto, a very unpopular Secret Santa. This week at Tesco, you can get sprouts, carrots, or parsnips from just 19p. Our festive 3. That should get you on the nice list. Tesco, delivering Christmas for 100 years. Selected stores excludes Express, ends 26th of December.
Introducing a new podcast, ESPN Daily. When you want to go beyond your feed, When you want to get inside the score, when you want to get behind the highlight, there's ESPN Daily. Go deeper into the stories of the moment. Get the exclusive access and insider perspective that only ESPN can give you. ESPN Daily, hosted by me, Mina Kimes. Listen and favorite ESPN Daily on TuneIn.
Whether you call yourself a Democrat, Republican, Independent, or something else, the road to 2020 is on TuneIn.
What a night!
And a complete earthquake. This was
Follow every step of the Democratic primaries while hearing the latest headlines from the White House with live 24-hour news from CNN, MSNBC, Fox News Talk, and more.
We're closing in on the first results in the battle for the White House.
Experience the election through the sources you trust with the nonstop news channels on TuneIn.
Welcome back. Despite Uber and Lyft's struggles, IPOs are still outperforming overall this year. Kate Rooney is here with a look at 2019's biggest IPO winners and losers. Hi, Kate.
Hey, Seema. Good to be here. So you mentioned some of the big names that have struggled, but overall public offerings as a whole did pretty well this year. The Renaissance IPO Index has outperformed the S&P in what's looking to be a historic year for stocks. The index saw a 33% gain versus a roughly 29% gain for the S&P. Biotech companies were big winners. Analysts say that's thanks to the FDA approving new drugs faster than investors had expected. Karuna Therapeutics topped this year's list with a 380% gain. The worst performers were mostly small cap names, but Uber and Lyft and Smile Direct as well are some of the bigger underperformers when you factor in market cap. Kathy Smith of Renaissance telling me the IPO resilience shows investors' appetite for high growth companies, but not those money-losing names without a path to profitability. Guys?
Appreciate it very much. All right, let's, you stay with us, of course. From Uber and Lyft to Peloton and Slack, 159 IPOs priced this year, raising $46.3 billion. That number down 1.2% from 2018. So what is the IPO outlook for 2020? Joining us now is Santosh Rao. He is the head of research at Manhattan Venture Partners, which has investments in Airbnb and Postmates. It's good to see you.
Nice to be here.
Perfect that you are in Airbnb and Postmates. I'm just wondering how we should be thinking about the pipeline given some of the blow-ups that we lived through this year, whether it makes it harder for them to go public.
We're absolutely positive. Going into, we expect the momentum to continue into 2020. The setup is right. The risk-on sentiment is still on. Everything is positive going into 2020, and we believe it'll perform well. There were some blow-ups, but we are investors in Lyft. We still believe in the story. I think it gets put in the same bucket as Uber, so it's getting some cross-currents there. So I think ultimately, I think it will perform. There's a lot of things going on, but overall, Postmates, Airbnb, these are the next big thing, and we are very positive on that.
But growth at any price is over, would you say?
Absolutely. Growth at any cost is gone. So I think WeWork on its way out did us a favor, did the market a favor. It was a wake-up call. I think growth at any cost does not work. Bad corporate governance structures do not work. No transparency does not work. So all those things are good for the market. So you're going to see that in the new companies that come out. They're going to be conscious of that. Even if they're not profitable, they're going to have a clear path, and they're going to just communicate that very well in terms of the future. I think that's very important.
I guess, Kate, a big part of the discussion is whether the lackluster performance of some of these high-profile IPOs will lead more private companies to take the direct listing route, which I guess 2020 will be the big test.
That seems to be a big conversation in Silicon Valley. Direct listings and the idea, like you mentioned, the sort of sector shift, that there's plenty of money floating around for the companies that do have a clear path to profitability. And if they have a stable business model and sort of a clear business plan, investors are all piling into the same names, but some of the bigger money-losing companies are losing out. So we'll see, but direct listings is absolutely top of mind.
What do you think, Santosh?
Absolutely. I think direct listing will get there. It's going to be a very incremental process. Not every company can do it. But I think the inefficiencies of the IPO market now have been very well telegraphed. I think Bill Gurley has pretty much articulated that very much, and then the market is catching on. So we'll get there ultimately. There are a lot of advantages to that. But I think overall, we see a lot of enterprise software companies bubbling up. The IPO pipeline is going to be skewed more towards enterprise software in 2020. Airbnb and Postmates are big ones, but I think most of them, in terms of edge computing, cybersecurity, and cloud security, there's so many companies bubbling up. They're in their 8th or 9th round, 7 to 8 years old, so they're ripe for IPO. So you're going to see a whole bunch of them coming to market in 2020.
Ironic, you use the words bubbling up, whereas some are looking at software especially and wondering about froth. Some of the valuations there, everybody's now a software company. Everybody is a cloud play. And, that's where the bulk of the optimism is for the coming year. You think we're getting a little frothy?
Yeah, when I say bubbling up, I don't mean in terms of valuations.
I meant like that. Don't, but I was taking that as a play on words for what I wanted to talk about. Yeah. Whether the space that you're so optimistic on has gotten a little bit crazy.
I don't think so. I think there is a need for that. They are all operating in the sweet spot of spending. You need that. There's also acquisition premium built into these companies. So you need that to really make the market more efficient. And by definition, these are disruptive companies. You don't know how they will perform. But I think the outlook is very good because they are in the sweet spot of where the market is.
You think with a company like Airbnb, we sort of know what to expect because they are two publicly listed companies, Expedia and Booking Holdings. We know their financials. We know how bookings and even accommodative listings work for that company.
Yeah, Airbnb is slightly different. I think they have the scale, they're pure play, they have they're global pretty much, and they're best of breed and well known. So I think there are a lot of things going for them. Plus, they're profitable coming right off the gate. So I think in all and just recently they won this big contract with the Olympics. There's an 8-year contract. So all the positive news flow is going to flow into that IPO, and you're going to see a good debut.
You think the Valley would want Vision 2 to happen from SoftBank? Or do you think there are some out there who say, this has had a detrimental effect on valuations at large, and maybe it's a good idea if it doesn't?
Yeah, I think Vision 2 is important. You need the funding as well. But I don't think you can just spray money around. I think it's going to be more measured. It's going to be more targeted, more strategic. And that's what they need to do. And I think that's what they're doing already in SoftBank. So I think you'll see that. You need, ultimately, funding is good. So liquidity is good in the private markets. And you need more private companies to come public. We need more public companies. So all that is good in the whole ecosystem of venture capital.
On that note, Kate, have you spoken to any private companies in the Valley that say they've been presented with money from SoftBank, but they've actually decided to say no because of the reputation that the company has right now?
It seems to be the WeWork situation seemed to be a sigh of relief from those who had not taken money from SoftBank to say we knew these valuations were unrealistic. There are others who, like you said, have said no thanks, but it seems like the only alternative is SoftBank pouring money into your competitor, so it sort of leaves them with a dilemma. But yeah, definitely a sigh of relief of saying this was actually a good thing. We've been calling this for years, and the WeWork thing definitely brought it to the spotlight.
Yeah, absolutely.
Happy holidays.
Thank you.
Happy New Year.
Same to you.
See you in the new one.
Take care.
Thank you. Santosh, thank you as well.
Still ahead, not for sale. Chinese social media firm ByteDance says it does not have any plans to sell viral app TikTok. We'll break down what this could mean for its major security concerns when Closing Bell returns.
Tell me my true love is here. He's all I want. 19p. What will that get you at Christmas? 5 minutes to Panto, a very unpopular secret Santa. This week at Tesco, you can get sprouts, carrots, or parsnips from just 19p. Our festive 3. That should get you on the nice list. Tesco, delivering Christmas for 100 years. Selected stores excludes Express, ends 26th of December.
Far wing, elevates, triple bucket.
The war of the crown. The shot clock ticks down. Will the ball go in? The suspense is pure torture, but you wouldn't miss this for the world. And the replays just don't cut it.
The sideline, the man fleet for 3.
TuneIn Premium brings you every minute of the NBA season streaming live, so you can be there when it matters most. Hear it now, hear it live on TuneIn.
Pump fake in the lane, turnaround jumper from 8 feet is good on the
Search
right.
NBA today to start listening.
TuneIn is remembering the biggest college sports moments of the decade, like this one from 2016, when Tennessee quarterback Josh Dobbs throws a Hail Mary to the end zone as time expires against Georgia.
4 seconds to go. Dobbs drops back, looks, loads up, fires long for the end zone. The pass is going to be caught by Tennessee.
Tennessee wins!
Caught it by Tennessee. Jawan Jennings. Jennings makes the catch in the end zone on the Hail Mary.
Search college sports on TuneIn to be there for the moments that go down in history.
The puck drops. 12 players face off to win. The suspense is pure torture, but you wouldn't miss this for the world. TuneIn brings you every minute of the NHL season. Listen live to hockey when it matters most on TuneIn.
On this week's On the Media, the Afghan war cluster fail.
Cluster fail is a good word, and people in the military use a version of that a lot.
The explosive Afghanistan papers, like the Pentagon papers before them, paint a picture of war driven by deception and delusion.
We didn't know what we were doing. Were all those lives lost in vain?
On this week's On the Media from WNYC. Listen to the On the Media podcast from WNYC Studios on TuneIn today.
Want to hear about the latest and greatest things to listen to on TuneIn? For reminders of the biggest live sports games, debates, and breaking news stories, follow @TuneIn on Facebook, Twitter, and Instagram to stay connected with the audio that matters to you.
With 2020 on the horizon, TuneIn continues looking back at the stories that shaped the 2010s.
In 2012, Black Lives Matter is born after the killing of an unarmed 17-year-old Trayvon Martin. In 2015, the European refugee crisis sees an unprecedented number of asylum seekers entering the EU after fleeing conflict regions like Syria. And in 2017, the Me Too movement inspires a new wave of social justice.
Search news on TuneIn to be listening when the next decade's big headlines break.
To sell its TikTok app. Julia Borston is here with more. Easy for me to say.
Quite a tongue twister there, but Chinese-owned TikTok faces growing scrutiny of how the social media app handles data and the question of whether it censors content. A report out yesterday says that China's ByteDance is weighing selling part or all of its TikTok app due to concerns here in the U.S. But the company responding, telling us, quote, there have been no discussions about any partial or full sale of TikTok. These rumors are completely without merit. Meanwhile, there was another report yesterday saying ByteDance is considering setting up a global headquarters for TikTok outside of China. The 3 locations reportedly under consideration are Singapore, London, and Dublin. But TikTok has said it doesn't share user data from the U.S. with its parent company or with the Chinese government, but it is facing significant scrutiny. The Committee on Foreign Investment is reviewing ByteDance's acquisition of Musical.ly, the startup which became TikTok.
Yeah, this is a company that has generated a big debate. Yes, 665 million monthly active users over Thanksgiving. All 3 of my nieces use it. They love it, right? This really has captivated the attention, not just of millennials, but Gen Z and that younger generation.
This is really the first social media app we've seen that has gained significant traction that is founded and based outside of the U.S.